Ver. Ver. Ver.
Test 1 2 3.
Bir. Bir. Bir, iki, üç.
bo'ldim. Ha, YouTube qayerda anaqa ketyapti? Kecha bergan
Test 1 2 3. Test 1 2 3. 1 2 3 4 5.
Keldimi? Tamati.
Recording in progress.
Assalomu alaykum, hurmatli hamkasblar, hurmatli mehmonlar, hurmatli bugungi davra suhbati ishtirokchilari. Ruxsatingiz bilan bugun mehmonlarimiz xorijdan tashrif buyurgan mehmonlarimiz borligi uchun ochuvchi so'zimni ingliz tilida davom etsam. So good morning, distinguished guests, colleagues, partners, and welcome to Central Bank, and some of you welcome to Uzbekistan, and thank you for joining today's roundtable, the floating exchange rate under the inflation targeting regime. Your participation from the banking sector, international organizations, academia, and the private sector, and the media reflects the importance of this discussion for Uzbekistan's monetary policy development. Since 2017, Uzbekistan has taken major steps to liberalize the FX market, starting with the unification of exchange rates and the shift toward the market-determined exchange rate system. Over the years, we expanded access to foreign currency, strengthened regulatory frameworks, and introduced new trading mechanisms such as continuous auctions, market maker programs, and FX futures to deepen the liquidity and improve market functioning. Recent developments show these reforms are beginning to take full effect. In 2025, starting from the April, especially, FX volatility increased, and this is not just a sign of instability, but as evidence of more flexible, responsive market, one that improves price discovery, encourages better risk management practices. At the same time, the SOM has strengthened this year, supported by solid export performance, moderating imports, strong remittance, and growing foreign investment. Looking ahead, we remain committed to a gradual transition toward fully fledged exchange rate, one that can better absorb external shocks while inflation targeting anchors price stability. With this in mind, I would like to outline several principles that guide our approach. First and foremost, we have emphasized that on multiple occasions, the Central Bank of Uzbekistan does not pursue any specific exchange rate level. So we don't have any targets, implicit or explicit, for certain level of exchange rate, nor does it seek to influence for fundamental trend of the FX rate. So we don't influence to the fundamental trend of exchange rate. Second, CBU's operations in the FX market are strictly price taking. So in the FX market, we want to be the price taker. In the nature, it's also the fundamental for us. Whereas in our money market operations, we have designed our framework to be price maker. So in the SUM market, in money market, we are price maker. In the FX market, we are price taker. Third, looking ahead, we remain committed to strengthening the market infrastructure, enhancing price discovery mechanisms, and deepening derivatives market. This includes advancing regulatory reforms and establishing local hedging vehicle to provide market participants with effective risk management tools and working closely with international financial institutions. Further develop and align Uzbekistan's FX market with international best practices. This is our third signal. Finally, today's roundtable underscores our commitment to transparency and close cooperation with international partners. We are not alone in this path. We have a lot of experience from foreign countries that moved through this path, and we will do our best to be in line with foreign best practices and standards. So in this panel, in the first section, we will discuss and we look forward to hearing global perspectives on the role of the floating exchange rate within the inflation targeting framework, particularly its implications for the monetary policy, transmission, external adjustment, and macroeconomic resilience as well. Let me say these four principles in Uzbek as well, because it's important for us to understand and at the same time to give right signal to market and to be in mutual understanding. Biza birinchidan umuman tamoyillarimiz belgilab olganimizda birinchidan oldimizga maqsad qilib qo'yapmiz. Bundan keyin ham shu yo'lda davom etamiz. Markaziy bank hech qanaqa kursni aniq bir targeti, aniq bir ko'rsatkichini oldiga maqsad qila olmaydi. Maksimal bozor sharoitlari asosida kurs shakllanishi uchun biza sharoit yaratib boramiz. Bu birinchisi. Ikkinchisi, Markaziy bank valyuta bozorida narxni qabul qiluvchi bo'lib qoladi va sum bozorida, pul bozorida narxni belgilovchi bo'lib qoladi instrumentlar orqali va o'zini operatsiyalari orqali. Uchinchidan, biza har doim bozor infratuzilmasini rivojlantirishda, umuman bozorni takomillashtirishda xalqaro standartlar va xalqaro qabul qilingan amaliyotlarga asoslanamiz. Biz o'zimiz bu bozorda yagona emasmiz. Bizdan oldin bu yo'l ancha o'tilgan va hech qanaqa yangi narsa ixtiro qilmoqchimiz. Maqsadimiz bor qilayotgan ishimizda xalqaro standartlar, xalqaro tajriba, rivojlangan mamlakatlarni amaliyotlariga muvofiq darajada olib borish. Bunda bizdagi xalqaro moliya institutlari, xalqaro kompaniyalar va konsaltinglarning yordami muhim bo'ladi. Va to'rtinchidan, harakat qilamiz. Bundan keyin avval ham harakat qilib kelganmiz. Maksimal darajada transparent bo'lishga, ochiq bo'lishga va har bir qadamimizda bozor ishtirokchilari bilan birgalikda olib borishga. Buning uchun bizga juda ko'p ham bozor ishtirokchilarini, ham xorijiy partnerlarning yordami kerak bo'ladi. And today we have two sessions. In the first panel, I said we'll discuss about exchange rate role and floating exchange rate role in the economy. After the break, we'll present the latest developments in Uzbekistan's FX market architecture, including recent regulatory enhancements, infrastructure upgrades, and measures aimed to improving market liquidity and efficiency. And then we'll go with the presentation with outline the refinements introduced in our international reserve management strategy, which are designed to strengthen our overall policy framework and bolster market confidence. And these presentations after the second part will be followed by dedicated Q&A sessions offering the opportunity for open exchange of views on how ongoing FX market reforms interact with monetary policy objectives, financial stability considerations, and broader trajectory of the economic development. So thank you very much for your visit, for your coming, and I hope for the fruitful discussions today, and welcome again to Central Bank. Let's give the floor to our moderator, David Vavra, the head of the OG Research Consulting Company, the company which we gained a lot throughout this transition to inflation targeting, because we started our journey with our foreign partners, not alone. We started with OG Research, with the EBRD, with the IMF, with a lot of other institutions, with the World Bank, and now we are in the middle of the road. And the OG Research was our confident and well-known partner, and we also rely on the OG Research's help and future fruitful work with OG Research in future. David Vavra, floor is yours. Thank you.
Thank you very much, Deputy Chairman. Thank you for the nice words. And ladies and gentlemen, welcome to this roundtable on the role of floating exchange rate in inflation targeting. I think the title is blunt, but couldn't be chosen more aptly, considering the ambitions of the central bank to become a full-fledged inflation targeting central bank. As one central bank governor used to say, we inflation targeters, when we get together, we always start speaking about inflation, but end up speaking about the exchange rate anyway. So what is so enigmatic about role of exchange rate under inflation targeting? Actually, what it is, a flexible exchange rate, after all. Can a relatively stable exchange rate trajectory be considered as a flexible exchange rate? Perhaps yes, perhaps no. Is a trending exchange rate, can it be considered flexible? Perhaps no, perhaps yes. Is central bank activity in the marketplace, in the Forex marketplace, consistent with inflation targeting? Again, perhaps yes, perhaps no. Perhaps it all actually depends on not so much on the window of appearances, but rather on perceptions of what we have in our heads, we as market participants, we as the public. And if so, what is it then that the central bank and the private sector should do, how they should behave themselves, how they should act in order for the flexible exchange rate to play its role in monetary policy regime, in inflation targeting, not as a target, but as an indicator and a helper in monetary policy transmission and the work that the central bank does in the economy. For this and similar questions, I have here a number of distinguished panelists. Some of them are joining us online. Some of them are present here. I will introduce them block by block. They hail from different sectors: private, public, domestic, foreign, international financial institutions as well. So I suppose I trust they will provide a good and plastic overview of what it entails to bring about floating exchange rate in support of inflation targeting. So without further ado, let me start with the first block of questions. So for the first block, we have here representatives of the Central Bank of Armenia. We have Haik Avetisian and Vazgen Pogosyan. I think he's also in the audience. Why Central Bank of Armenia? Well, Central Bank of Armenia, and I think I and Central Bank of Armenia, we go a long way back, began its efforts to introduce inflation targeting 15, 20 years ago almost. And they had made a great progress, and against the most impossible circumstances. If you think geopolitically, number of shocks that has taken place over the last 15 years, beginning with global financial crisis and on. And so their insight into what it takes to build the flexible exchange rate inflation targeting under such circumstances is most invaluable. So welcome on stage. We also have, as a third panelist, we also have Simon Gray, former official of the IMF, now consultant for the IMF. Again, Simon and I go many years back. And Simon, may I say that you worked on flexible exchange rate issues for practically decades. And he's a treasure trove of knowledge about the topic. So I'm very happy I can welcome him on this panel as well. He's joining us online. So I'll start, Haik, with you, if I may. So how would you characterize, what are the main benefits and risks potentially in maintaining a free-floating exchange rate if you think about economic growth, inflation, and external competitiveness, especially in the context of Armenia, but you may go more broadly. Go ahead.
Thank you very much, David. Thank you for the kind introduction, and good morning, everyone. First of all, also I would like to thank for the organizers to inviting me and my colleague actually in this panel actually to discuss our experience. Yes, when we started from the, let's say 20 years ago with an inflation targeting, one of the preconditions for basically joining inflation targeting at that point was considered whether the country has flexible exchange rate or not, whether the capital accounts are liberalized and everything. Of course, we did have all those preconditions at that point because we started our kind of liberalization, financial liberalization, capital account liberalization quite early in the early 90s actually, and the euro actually introduced the flexible exchange rate early in late 90s actually, 97, 98. So all the preconditions were there, but I would like to also come from the other point of view because there were also many preconditions not available for joining the inflation targeting. And that point we were discussing whether it is the right time to go there, to go and introduce inflation targeting or not. And we realized that it is the right time because it's always when you wait for the preconditions to be available, you will always be late or behind the curve. And that's kind of a message for probably for many central banks, just go and do it. And on the go, basically, we will realize all the challenges or the problems and all the benefits also for doing that. So now coming back to the question, why flexible exchange rate could be beneficial for the kind of for the economic growth, for the competitiveness, for the effectiveness of the monetary policy. There are multiple kind of papers, discussions in the literature. We can all just read all those things and realize, okay, we should be committed to the flexible exchange rate targeting. But I would come from the other point, from our experience, how we can realize that it has certain implications. For example, when we are talking about the benefits, the first one is the exchange rate acting as a natural absorber in terms of the shocks, especially in terms of the external shocks. In our case, like small open economy in very kind of, I would say, volatile geopolitical kind of environment, we all the time were talking about external shocks hitting our economy. And going back in during this very recent periods, Russia-Ukrainian conflict and so on, what happened, we had a lot of inflow of financial capital inflow and migration into Armenia, and also many of the countries in the region, including, I guess, Uzbekistan as well. They were all facing similar challenges. And one thing that was somewhat different in terms of the policies that we did, probably in Armenia and in Georgia, I guess, similar, was allowing the exchange rate basically to act as a shock absorber in this particular case, basically to appreciate a lot. Of course, at the initial stages, we had all these problems, issues, media coverage, exporters were complaining and everything, but we just allowed it to act as a kind of shock absorber. After some period of time, like in 2 years after, when we started to analyze the situation in many countries in terms of the inflation, like actual inflation, which is the main kind of indicator for the monetary policy makers, we realized that in all of the countries in the region, only in Armenia and Georgia, the inflation went down. And we realized why it happened, whether they really were very good in monetary policy making, not really the case of the monetary policy making, although exchange rate flexibility also part of the monetary policy making, but just a matter of the exchange rate that was allowed to appreciate. For example, even in the Central Europe, we had countries like Croatia, Serbia, which were more or less kind of okay, Croatia that didn't have even a chance just to allow the exchange rate to appreciate because it was part of the kind of fixed exchange rate kind of block. And we have seen that just this only factor of the exchange rate acting as a shock absorber has quite big implications for the effectiveness of the monetary policy in terms of controlling inflation, and also for allowing the exchange rate, allowing the economy and the economic growth to adjust to this external shock without causing any big problems for the domestic kind of economic developments. Yeah, I can go like forever, but
I think this has been a great introduction to the topic, and because it nicely said that we are not typically as a as a macroeconomist, you are not only worried that the exchange rate could go off the hook and depreciate and this anchor and de-anchor expectations, but you could equally, as a macroeconomist, be worried, and you are, when exchange rate appreciate without hedge, and which could drive away competitiveness, and you have natural fears about both of these phenomena. But what you're saying is these phenomena can be handled and are important part of exchange rate being a shock absorber. But you need to be aware of them, and you should not be afraid. You just, if I may repeat your words, you said just do it. Which I think it's nice as a catchphrase, but maybe for the conference. But it's easier said than done. So, what would be in your view the main lessons to ensure smoothness in this transition? Okay, because the shocks will come, and in your case, many. So you are most qualified to say, just say maybe two. What would be that? What would be those one lesson that we should take away to make it as smooth as possible? Thank you.
Yeah, if this is just for one lesson, then I have to choose, because there are many. Just for one lesson, I will choose the one which probably will not be able to find in the literature, but this is very important that we can find it from the experience of the central banks. Today in the morning with Vazgen, we were discussing exactly the topic, and then we realized this is all about the fear of the volatility. To overcome the fear, it is also it's important inside the central bank and outside of the central bank. Just overcoming this fear with regard to volatility, like general volatility, could be the kind of the most important lesson, or the most important way to go towards more flexible exchange rate, and to achieve our commitment with a more flexible exchange rate. And how to overcome this fear? There are many country cases, like how they did it. Like, for example, the Czech Republic case, like this was which kind of with a shock, very quick adjustment, just do it approach, and we realized that, okay, both the markets and the central bankers would see that, okay, it still works. So, and it's very quick to overcome this. And many other central banks like did it in a gradual approach. For example, the Bank of Israel, like with gradually overcoming the fear. For our case, we did both. And I would say both would work, but personally, I would rather take the Czech approach, basically just do it and you'll overcome the fear, basically. Thanks.
Thank you. We will have Karl Bauer here later on speaking about the Czech experience, or from Czech experience. But who is afraid more, if I may follow a little follow-up question, is, in your view, is the central bank or the authorities are afraid more, or is the private sector that is more afraid? Whose fears should be mitigated most?
I guess in the central bank, we think that this is the most difficult part is outside the central bank, but in fact, it is inside the central bank, probably.
Thank you. Thank you very much. Simon, I know that the IMF has been looking into the issues of the flexible exchange rate in Uzbekistan and the conditions for those. Would you feel comfortable characterizing some of the findings and recommendations or challenges that lie ahead for the Central Bank of Uzbekistan in that regard? Please, floor is yours if you can hear me.
I can hear you. Can you hear me?
Yeah, Simon. Yeah, hi.
Great.
Hi, by the way.
Good. David, hi. And greetings to all those in Tashkent. I'm sorry I can't be there with you. So I'll just make a few brief points to begin with, and then we can maybe discuss. First, I think it's very clear that since 2016, 2017, the changes undertaken by the Central Bank of Uzbekistan to bring in a unified and a more market-determined exchange rate have been huge. They've been a game changer. And looking at other countries, both in the region and globally, Uzbekistan has done a lot of the heavy lifting in moving to a flexible exchange rate. One of the issues that we looked at, and I'm sure the market is aware of, is that the Central Bank of Uzbekistan still has a substantial footprint in the foreign exchange market. And as long as the CBU is going to be buying gold that's produced domestically and then sterilizing that largely through foreign exchange sales, it will have to have a large footprint, and that's okay. One of the key things and the difficult things is to have a footprint that is day to day relatively predictable. If it's not predictable and if it's perceived as being discretionary, then despite the genuine attempts of the CBU to be a price taker in the market, it may be perceived as being a price maker. Some of the key issues we talked about were changing the way that the call auction and the matching session work on the currency exchange to a way that will enhance price formation and help the CBU to be seen and perceived clearly as a price taker in FX and a price maker in the domestic interest rate market, which is exactly the right direction to be heading in. How that can be done. And we suggested that that can be done through in institutional steps, through some small changes in the way that the CBU operates in the call auction, in the way that the foreign exchange market makers have to make a market, the regulations controlling the way that they operate. And importantly, in the way that the CBU communicates its policy. Picking up on your question just now to Heike on how that transition, the final transition from a flexible exchange rate to a more clearly market determined exchange rate can be made. I would say one of the most important things is that the context is crucial. And communicating the context, which would include not simply saying from the central bank's point of view, we want a flexible exchange rate, but saying how the central bank will intervene in the market or participate in the market so that the market knows if the central bank is buying or selling, is this purely following what's called the neutrality principle, or is it leaning against volatility? And as a side point, I'd say in general, I think people feel that flexibility is a good thing and volatility is normally perceived as bad. So you want a system that allows flexibility without a volatility that surprises people. So communicating more about what the central bank's operational modus is in the market is helpful, but also as part of the broader context of communication, what's happening with the fiscal policy? Where do you see the macroeconomy going? And maybe one final point I'll make in terms of the introductory remarks. I was discussing the week before last with some banks in Southern Africa, most of which have an exchange rate pegged to the South African rand, how best to manage. And it was clear that for some of them, the equilibrium exchange rate at times might appreciate or might depreciate, depending on things like the developments in the balance of payments, or whether the government is taking a strongly stimulatory or contractionary fiscal policy. And if that too can be communicated so that the market understands how the central bank is thinking about these things and how these things might impact the equilibrium exchange rate, that helps the market to form expectations about the future. It's clear that market participants don't just care about what is the price at this moment, but where are things going? Where do we think things will be in a month's time, or 3 months' time, or 6 months' time? And the more the central bank can communicate the context, the easier the transition to if you're going for fully flexible exchange rate, the easier that transition will be. Let me stop there for the moment, and David, let you pick up on the points you wish to develop.
Thank you, Simon. You've touched upon all the, I think, important topics that lie ahead of the CBU. And which one of those you think is going to be most challenging for the CBU? You know, you spoke about predictability, need to be predictable. You spoke about a need to gradually give reins to the market participants. Uh, uh, you spoke about the importance of concise, clear communication with everyone involved, etc. So which of the things you think are gonna be most challenging down the road? You know, is it gonna be the, yeah, what? That's your question.
So, two possible answers to that. One is anything short of full flexibility, where the central bank says, we don't care where the exchange rate goes. It'll be a shock absorber and we'll manage our side of the policy policies through our interest rate tools, our monetary policy setting. Anything short of full flexibility implies some degree of management by the central bank of the exchange rate. And for the vast majority of countries worldwide, there is an element of management in the exchange rate. And I think a difficulty is that while it's easy to conceptualize that a flexible exchange rate is helpful, it's a shock absorber, you might say a more flexible exchange rate allows more shock absorption. Working out on a day-by-day, minute-by-minute process, what does that actually mean? If there's some degree of management in the flexibility, when do you choose to manage and when do you choose to be hands-off? That's very difficult to start to pin down and extremely difficult to communicate to the market. That said, I think, and having talked to people in the market in Uzbekistan and the central bank, I wouldn't expect that to be a major problem for Uzbekistan in particular. For some countries, that's a really big issue. But given that the starting point is, you're not at the starting point, actually, you're a long way down the road. The market understands, and we can see in the way that the banks interact in the matching session on the exchange, that the banks are used to the price moving from minute to minute. They're used to feeling out what's happening in the market. Market participants are used to the exchange rate moving in both directions without panicking. So although conceptualizing and articulating and communicating exactly what we mean by flexibility, a bit more flexibility, but not total flexibility, is difficult, I think the market in Uzbekistan is ready for it. And perhaps, as you suggested earlier, normally the group that's most concerned about the market running out of control or unwarranted volatility is the central bank. The market, companies, individuals in most countries can cope with that pretty well.
Thank you. I think it excellently caps the first part of our today's panel, because it brings up the issue of exchange rate volatility and how to handle it. If I were to summarize some, just in a few words, what this first part of the panel, what kind of lessons we learned is, be predictable, overcome your fears, just do it, and the market is probably more ready for absorbing volatility than I'm including myself, we as central bankers typically tend to think, and they may tend to overthink. Thank you. The first part of the panel, and so let's move to the second half. Oh, it's not half, second bit. And for that part, I have here Mr. Karel Bauer. Karel is now a director of the division at OG Research, and previously he had been head treasurer for the Czech National Bank and chief risk officer for a number of years, and so he has a first-hand experience with introduction of inflation targeting in the Czech Republic, actually from the very beginning, 1990s, until quite recently. So I'll welcome him on the panel. We also have Pinar Yassar from the World Bank, senior economist at the World Bank. Pinar had been working on development and competitiveness issues, so issues that we started with hike for many years, first in Turkey, now for the World Bank. So I'm very happy that we can have her views on the panel. And online, we'll be joined by Koba Gvenetadze, the IMF representative. Koba however, before had been governor of the National Bank of Georgia. And as we heard from Haik earlier, National Bank of Georgia had been, together with the Central Bank of Armenia, at the forefront of inflation targeting efforts in the region. And Kaba's governor was present at the, should I say, final stages of making putting in place full-fledged inflation targeting. I think we met first time in, I think, 2016 at about a time in Tbilisi, and needless to say, Georgia as well as Armenia, as the central banks, had made great job in that in along the journey of inflation targeting, despite very difficult external circumstances and geopolitical situation. So I welcome him on the panel. He's joining us online. So let me start first with Karol. So exchange rate volatility. So to what extent you think it can be considered acceptable or even beneficial for the economy like Uzbeks, and how should it be managed, if at all? I mean, we heard Simon begin speaking about it, but think about stability, competitiveness, other issues. Taking perspective from the Czech National Bank for the last 30 years, what would you say?
Good morning, everyone. Thank you for having us here. When we were preparing for the roundtable, David was mocking me that I'm famous for very short answer. So the very short answer would be yes, volatility is beneficial for the market and for the economy. But I think it's quite obvious. But I just realized when you introduced me that, and as we were talking before, that one thing that happened just earlier, just before introduction the inflation targeting in the Czech Republic, was the collapse of the pact FX system in '97. So I really do think these two issues are very much connected. And actually, the introduction of inflation targeting was, I think you will remember as well, it was one of the cures of the collapse of the pact system. So it's just like maybe some quite interesting documentation of this connection. The benefits of the volatility to the FX market, I think, are quite obvious in my opinion, because the volatility brings the reason for market activity. I do believe, as we briefly touched before, that it's already observed here, but I don't know, maybe I will give you the very oversimplified example, but if you live in an environment where the exchange rate is on a slightly declining devaluating trend, what are the reasons for the activity? Any importer is buying the foreign currency as soon as he knows the flows, the cash flows. Any exporter is not selling until he really has to. So what's the reason to trade? The volatility basically creates a need for those people, for these economic agents, to hedge themselves, hedge their exposure. It brings some liquidity to the market. It attracts the other trading, and this trading attraction basically creates robustness of the exchange market, and makes it more deeper. So some flows, even bigger flows, now do not create huge movements of the exchange rate. It's like more resilient. And then it can act, only then I believe it can act as the like nominal anchor that Haik and others were talking about before. So this is, in my opinion, this is one of the key benefits. And of course, sometimes the volatility could scare the people involved, could scare the central bank, could scare the commercial banks, exporters, importers, everyone. And there could be a lot of pressure on the central bank to do something about it. And we have experienced it in the past as well. So yeah, the central bank always will have the option to step in and tame the volatility or tame the exchange rate if it goes of the limits. But I do believe, and the Czech National Bank very long time behaved according to this, always behaved according to this rule, that this involvement should be as limited as possible. And in the inflation targeting regime, my opinion is that these targets should be never conflicting. Just prevent strengthening of the local currency in the situation where you need to tighten the monetary conditions. I think it's a move that should not happen, really. It should be very well considered if it's really necessary. As well, the central bank should really not do with the exchange rate something that could be achieved by the use of interest rates. I think this is the most important rules that should be considered when considering activity on the forex market by the central bank in inflation targeting regimes. Of course, there are other things. The central bank has its clients, has its own foreign reserves to manage, maybe, and that means that it has the FX exposure to the local market. Well, central bank can handle this exposure better than most of the other institutions and agents in the economy. That's for sure. But even though it may need to reduce, may want to reduce their exposure. So maybe, for example, it was a case of, it is still the case of the Czech National Bank, try to disperse the returns from the reserves management to the market. You can do these operations, the skilled traders, if I would put it this way, can do a transaction in the FX market in a way that it has minimum effect, or in case that we face some extra volatility, some shocks, skilled trader could do a lot of noise with a small amount as well. So this is the difference of approach has to be considered as well. You can't avoid, I think, truly speaking, the complete non-presence in the market. Servicing the client is probably one of the important issues, but it always has to be considered, and always has to be considered if there are not other tools how to approach the problem.
Thank you. So now taking this exchange volatility could be beneficial, but the statement, as we've heard, comes with strings. So Pinar, turning to you. So how to mitigate if you think that the volatility, especially in the short term, is excessive? How to do it in a way that is not intrusive? I mean, Carl said that it can be done by a skillful trader with minimum efforts, but I'm sure reality is more colorful than that. But Pinar, what's your view?
First of all, good morning, everyone, and thank you for the invite. It's a great pleasure to be a part of this rich discussion. First of all, I will start with my main message, core message. Let the exchange rate move with fundamentals, as Deputy Chairman rightly pointed out. Intervene only to smooth disorderly swings, not to defend a level. And this will preserve inflation targeting credibility and limits short-term volatility. So I would like to, one by one, highlight the main principles that you already know, how to effectively manage the foreign exchange markets. And the majority of these activities are already overseen by the Central Bank of Uzbekistan. First rule, I think, in my view, clear rules, no surprises. So publish a disorderly market intervention code, right? Define the triggers and what kind of instruments are you using, and sterilization commitments, so the policy rates remains the main signal. Second, don't defend the level, defend market functioning, intervene only excessive volatility, and avoid opaque or level defending actions, because these actions will erode credibility and burn reserves, and stick to transparent smoothing, not targeting. And the third one, which is quite important in my view, because I saw very bad examples in other countries, is keeping the policies aligned. So it's not the only responsibility of the central bank. right? Maintaining consistent macro policy framework, and especially the monetary and fiscal alignment, fiscal policy alignment. Because in one hand, maybe there might be a tight fiscal policy. On the other hand, if you extend massive credit expansion, then this is not consistent, and the vice versa. So it should be very consistent, and Ministry of Economy, Finance, and the central bank should be on the same page, so that FX operations don't undermine the inflation target or create any conflicting signals, because this could definitely complicate the situation and can give a lot of conflicting signals to the markets. And the fourth one is using the buffers to peg, to smooth, not to peg, and communicate. Deploy, as Mr. Hayek highlighted very well, deploying the reserves as shock absorbers, not anchors. And I believe that Uzbekistan buffers, it is around 8-10 months of imports in recent years, allow temporary smoothing without sacrificing flexibility. And report interventions and reserve changes regularly, and reiterate that FX actions are sterilized, time-bound, and inflation target as an anchor. And the last one, which is also quite important, managing the expectations properly and proactively. So address the perception head on. Why I'm telling this is quite important, because I have been a lot of occasions in the recent months, and businessmen keep approaching me and asking me what is happening in the exchange rate, why it is appreciating, because they get used to depreciation of the sums. They are paying their salaries of their staff in sums. They are getting majority of their incomes in dollars. So they were enjoying this moment and competitiveness. In terms of competitiveness, now they are asking that why it is appreciating against US dollars. In many countries, we see the opposite. And we believe that the central bank is heavily intervening the market. And I'm trying to explain the situation to them, like export revenues are increasing, gold prices are increasing, market forces are in place. So this is very natural to expect the exchange rate appreciation. But they are not, somehow they are not convinced. I'm sure that Central Bank of Uzbekistan is communicating with the private sector, with the businessman. I think more consultation, more discussion with the private sector will be quite important in terms of clarifying objectives, publishing data, and explaining how operations support orderly markets, not a fixed rate. Just to avoid wrong perception, I would say. So what has worked in Uzbekistan so far? I think Uzbekistan is a quite good success story. 2017 liberalization and unification, ending the dual market and moving to market-based FX pricing, improved price discovery, and removed distortion-driven volatility. Also, we see that since 2019, a neutral stance, offsetting gold-related flows, smoothing disorderly moves, has kept the regime quite credible while allowing the sum to absorb shocks. So my final point, before coming to some examples, just to give a sense how wrong policies can lead to unexpected results, expected results, I would say. So flexible exchange rate, clear rules, disciplined intervention, and transparent communication. So the market set the price and policy preserves stability. These are the main points that I would like to make today. And I would like to give not good lessons, but bad lessons from the region, from just to have a sense that like heavy intervention or just insisting on the defending the rate, how harmful it is. For instance, Russia, 2014. You know that at that time, oil prices collapsed, sanctions tightened in 2014, and it put severe pressure on the ruble and the balance of payments. What authorities did? Central Bank of Russia spent large amounts of reserves, raised rates repeatedly to defend the currency within a band. Then on November 10, 2014, they moved to free float and then moved to formal inflation targeting framework with the policy rate as the main tool. So what went wrong? Large loss of reserves, still failed to stop the depreciation, and then large sudden rate hikes were needed to stabilize expectations, adding to economic costs. So reserves fell over around by 80 billion, I think, before authorities attempted to defend the rate before floating. So what are the lessons? Don't defend a level against fundamentals. It is costlier, less effective than moving promptly to a credible float anchored by the policy rate, with interventions limited to smoothing disorderly markets. So this is a very good lesson. And Kazakhstan, 2015, again, free float with clear signals fueled volatility and dollarization. There was a terms of trade shock again from lower oil prices and stronger USD made a lot of big pressure on tenge, and devaluations had already tested credibility. And again, the authorities try to have repeated interventions and shifting bans. And then finally, the government announced a move to free float in August 2015 and transition to inflation targeting. Of course, there were some mixed messages during that time, and on-off FX intervention undermined the credibility of the float, encouraged dollarization and the volatility. So again, they spent a lot of reserves, depleted a lot of reserves, and deposit dollarization spiked above 67% for households and firms, reflecting low confidence. So these are all the examples from the region over the last decade, just to avoid that kind of intervention, because it is costly. At the end of the day, you need to float the rate, but with a high cost. Thank you.
Yeah, great. Thank you for both the theoretical background, but also practical examples of what to do. So don't intervene, don't go against fundamentals. But you also repeated the message of some previous speakers: transparent communication, transparent communication. Again, one other point that I really liked was that you mentioned consistency of policy. Carol brought in consistency between interest rate and exchange rate policy. You are bringing in the necessity of consistency between fiscal and monetary policies as well. So I think that's also a lesson that is coming from this conversation. But returning back to communications, let me turn to Koba. So what would you say, how to make sure that we communicate, central bankers communicate transparently and not only to the markets and to the public, but maybe also with the government as regarding fiscal policy? What would you think are, from your rich experience, both as IMF official as well as a governor of a leading IT center bank, what are the lessons? Thank you. The floor is yours.
Yeah, thank you and good morning, and thanks for the invitation. Unfortunately, I am not in Tashkent today, but of course it's my pleasure to be here. Just a few words before answering to your question. As is already mentioned here, inflation targeting definitely has proved in countries in the region, in Armenia, in Georgia, that they have been very effective in addressing inflation and inflationary pressures. We are working on a departmental paper in Middle East and Central Asia, and it has also found, it is forthcoming, it's not published yet, that because these countries, Armenia, Georgia, and they had a clear price stability mandate, and they have been supported by well-developed monetary framework. They moved very quickly to tighten monetary policy by raising interest rate after COVID-19, and actually the results in terms of disinflation they saw very soon. And also, often when we discuss it, and when we discussed why is it necessary?
Koba, we lost you for about 30 seconds. Could you? Let us wait for a bit. Just let's see whether the connection can be recovered.
Hello?
Yeah,
Hello?
Koba, hi. Yeah, we can hear you now. Could you, we lost you about a minute ago. Are you there? We can't hear you, I'm afraid.
Hello?
Yes?
Yes. Do you hear me now?
Yeah, we can hear you now. It's better. Yes,
Okay.
please.
Okay. So, yeah, I just wanted to say that this approach and greater exchange rate flexibility actually also has a fundamental background because so-called impossible trinity by Robert Mandel and Marcus Fleming also says that country cannot have three things together, to maintain fixed exchange rate, to have a free capital mobility, and to have an independent monetary policy. And independent monetary policy is absolutely necessary for the Central Bank of Uzbekistan and capital mobility as well. So that's why exchange rate cannot be fixed. So in terms of
Koba, you're breaking. Koba?
David, let's
Yeah,
continue.
wait.
Yeah.
Why don't I ask some other panelists, maybe central bankers here, Haik, Vazgan, I'm sure you can say something about your experience communicating on exchange rate volatility to markets and fiscal policy.
David, also we have Etibor Jafar from the IMF, and he's raising his hand, and he can also add from his side.
Okay, yes, please.
To the hike as well.
Yeah, so,
good morning and salam alaikum, everyone. Greetings from Washington, D.C. We were in Uzbekistan on mission. I just returned a couple of hours ago. Hopefully, there will be no interruption this time. While Koba takes his time to reconnect, I wanted just to briefly discuss things that were not mentioned. For example, why if you think, some central banks intervene actually in their view to correct the exchange rate. So often it's said financial stability concerns, right? For example, on that one, you can do some work to prepare financial sector better for this more flexibility. For example, monitoring their financial situation closely and also conducting stress tests, you can take some measures inviting these banks to manage exchange rate risks better. But in the past, actually, for some reason, it was the fact that there were some expectations, one-sided expectations of depreciation, 5 to 7% depreciation expectations by banks. You don't want to create that kind of expectations. And for example, as a result, it was very beneficial for borrowers and banks to borrow just in effects versus in assume, because you created one-sided expectations. But now with, for example, if the exchange rate started appreciating this year, that a little bit, that effect started to disappear slightly. Still, it's there. Borrowers prefer borrowing in effects versus assume, but that's a slightly different topic. Then other reasons could be shallow markets, right? Often said. The markets, FX markets are shallow, including in Uzbekistan. Let's acknowledge this. And small pressures can create large exchange rate volatility. Simon's work, by the way, I recently was very glad to read it, and I was very glad to see that Simon was working. He's my former colleague at MCM on Uzbekistan, and he produced a nice report. So it's basically his work should be paid close attention to, how to improve the functioning of FX market. There are very useful recommendations there. And another factor you could think government also might be interested in countries like Uzbekistan, where large shares of revenues are related, for example, in this case gold. And if there is appreciation of the currency, government's revenues go down, right? But then that's kind of one-sided view. But in net, government should support the central bank to achieve its inflation target. They should be cooperating, and these effects of volatility, etc., should not be a factor in exchange rate moving. In general, actually, I would say what is how in inflation targeting framework, foreign shocks should affect the economy, right? I would say deal with inflation effects of those shocks and not the shocks themselves. Let the shocks affect the economy. It's not central banks or exchange rate. The central banks work to deal with those shocks. They cannot do a good job, actually, even if they want to, even if you want to. But you have to deal with inflation effects of those. And that should be communicated, like as others said. I will stop here. I may have other, I have another thing to talk about. That's actually gold operations of the central bank. I'm not sure if David, you were thinking of like a discussions on that one or not, but maybe later.
Thank you. This is a host of very, very important topics that I thought we would cover. Some of it we may cover. Actually, we have a Q&A session later on, so maybe that could be also a good forum for your additional intervention. So thank you for stepping in. And with those comments, now in the interest of time, Heike, would you have a few very quick communications related lessons? Thank you.
I think that this is absolutely kind of essential to have a clear-cut communication or very clearly defined communication about FX interventions or any interventions that the central bank is doing in the FX market, actually. And here it's very important. Why it is very important? Because very often from the market's perspective, or even inside the central banks, foreign exchange interventions are associated with the exchange rate. And here we have Carl's view and Pinar's view that very often this is also can go inconsistent with other monetary policy objectives and inflation targeting objectives and so on and so forth. In order to kind of cut these linkages or possibilities of people associated with these two things, when the central bank is intervening, that might signal that the central bank is less committed to the price stability objective and so on and so forth. We have to design and probably also to make it public, the general kind of view how the central bank thinks about for FX market interventions, and in which certain situation, in which kind of circumstances it can intervene in the market, and how the communication in this particular episode can be done. So in that regard, basically, we are currently working on similar stuff of communique document, actually, and I guess by the end of this year, probably will make it public, basically describing all the use cases when the central bank most probably can intervene. Could be like for price stability reasons, obviously not very many kind of use cases for price stability, but could be like for, especially for disorderly market conditions, could be some use cases for kind of financial stability reasons, but those are the cases that the central bank can intervene, and how the communication can be kind of tilted or adjusted in different kind of episodes depending on the reasons of intervening in the market. But I think this is absolutely essential to have this communication available all the time, and it's up to us basically to decide, and it depends on the use cases. It is very important to kind of also have this distinct separation in terms of use cases, how the communication is designed. Basically, should it go before the intervention, or it could be kind of the ex-ante communication about the intervention. And there is no one kind of way of thinking about that. It should be, again, attached to certain reasons or certain use cases for the central bank interventions. Yeah, thank you.
Thank you. So I think that caps the second part of today's panel. And if I were to use one or two words to characterize what we've heard, is that volatility is beneficial, and the private sector is more ready for it than we central banks think. But maybe that's not true. So let us now turn to the private sector part of the panel. And in the third block, we will speak more about the technical infrastructure, price discovery in the market, and actually hedging opportunities against volatility. So how can private sector hedge against volatility? Sorry. I have 4 speakers here on the panel to welcome. First, we have Johar Said Kamalov, Deputy Chairman of the IPAC Yuli Bank. I think he's going to be joining us online. Then I have Xander Godrian, Head of TCX Trading. Xander we know each other for a long time, and TCX and Xander has been at forefront of providing offshore hedging solutions for a number of frontier currencies, and they began trading in Uzbekistan when was this? 6-7 years ago, right? Quite very early after liberalization of exchange rate. So I'm very happy to have him on the panel. We also have Rashid Usmanov, the head of the currency exchange, and Rashid had been on I saw some of their efforts putting together infrastructure behind trading infrastructure and doing really magnificent work that is I think helping market functions not only here but also in the region around. So I'll be very happy to hear his views. And finally, last but not least, I have Ketevan Antidze, the head of the local Commerzbank office. I'm happy that she will share her views with us on how the private sector can actually hedge its risks and volatility here in Uzbekistan. So, Johar, can you how hear us?
Yes,
oh, you're here. Oh, sorry, I didn't know. I thought you were joining us online. So how would you, okay, we heard from Deputy Chairman a very ambitious agenda, but also a lot of steps have already been accomplished this year. And so this is really a reform year from perspective of the exchange rate market. So what is your impression about this and about this program, and what challenges you as a representative of the private sector of a leading bank would you see as a market maker, as a participant? What lessons should the central bank take away?
Okay, thank you, David, for the interesting question. I would like to thank you to be here. I'd like to thank the hosts. Well, first of all, it was very interesting to hear the information and hear the discussion about this situation from the bird's view, and I would like to share some information from the field operatives as a representative of the private bank. So in regard to the new program, I can say a little about our bank. IPAC Yuli Bank is a private bank, and it's been operating as a market maker on the Rhombus platform of the Republican Currency Exchange since October 2021. It was an advantage actually at that time, but there were no any challenges because were the only market maker at that time. As for today, the market makers number rise to 6. I think the reason for that is that program provided opportunity to make exchange trading transactions on the basis of exchange rates forming up depending on supply and demand. Another significant change, prior to that program, banks were allowed only to make transactions at the fixed rates at fixed times. Another significant change that we can point out is that is the widening of the spread corridor for the two-sided matching auction trades. From these figures are from 0.07 to 0.15 percentage points. So this thing allowed banks and as a market makers to make more transactions at the favorable rates. In regard to the other part of your question, well, suggestions for improving transactions and market making, we would like to propose to consider, as we know, we have only option of T+1 as for today. Some more options like T+2, T+3 would be good to have an opportunity to forecast for 2-3 days of the exchange rates, and these kind of options would be much more favorable for customers as well to plan their transactions in terms of export and import and meet their needs. Thank you.
Thank you. And in one word, do you think that the private sector is ready for more volatility?
Yes, it is ready, but I would like to point out that our colleague Pina said, the communication of the rules is very important and responsible trading is very important. So the traders and market dealers have to understand the rules of the game, and that communication is very important for that. Thank you.
Thank you very much. Maybe let me take the opportunity and reverse the order here a bit and turn to Ketevan. What do you think? Is the private sector ready for more volatility, and how does the more volatile exchange rate correlate with the financial performance of the banks and financial institutions?
Thank you very much for your question, and I would like to take this opportunity and to thank very much the CBU as our regulator at the Rep Office of Commerzbank for the continuous support and great open dialogue we maintain since many, many years. And I'm sure that my peer colleagues here sitting in the first row would like to join me by thanking you for this great opportunity also to grant this platform. To come to your question, I think today lots of great economists and the stakeholders from the national banks have already elaborated on this topic, and I echoed and remembered actually my lessons at Tbilisi State University of Macroeconomics about how important free float exchange regime and the free exchange rate has been for the equal and inclusive distribution of wealth among the population and the market stakeholders in general. And I won't bring here something new on the topic, but from the Uzbek perspective, I can say that I think we all agreed that FX liberalization, which the Deputy Governor has elaborated on, has been one of the greatest and one of the most prominent reforms in the history of the independent Uzbekistan. And this reform has paved the way for FX and for free floating exchange regime application, I would say, in the banking sector. And the banking sector, with a collaboration of these two aspects, of very much benefited, we think, starting from the FX and money market related product developments and product pillar establishments till fee business, let's say, related income boostering, and of course, better accessing of international financial markets and capital markets. And those two aspects very much, let's say, contributed to the improvement of Uzbek banking sector financial profile, let's say, yeah, overall improvement. And we as a big financial institutions being here for more than 25 years, so very, very closely observed these trends. And what I'm trying to say, tangible and reasonable free floating would not be possible with FX liberalization. You can't really tell the market, you're free to exchange the money, but here the fixed exchange rate. So these two aspects have been very much intercorrelated with each other, and we very much appreciate this in general. So I'll be, for the sake of time, I'll be very short. I wanted to just touch on the point about the fact that despite and I think Bobohan agree with me, because we have been discussing it, despite the local funding structure of the banks, which causes and definitely causes the needs of international funding in terms of the lending growth. Despite this, and despite the fact that all FX risks have been incorporated into the international lending practices, the payment history of the local banking sector on international level has been excellent. And this is a good indicator for our risk colleagues, if you like, in Frankfurt, and for us here on the front, that not only credit or sanctions compliance risks are well managed from the local banks, but also FX risks, which are integral parts of their obligations on the international market level.
Perfect. Thank you very much. This opens the door nicely for you, Xander. As I said, TCX had been in forefront at providing hedging solutions offshore. And but what about possibility to hedge onshore? Do you think that having some local onshore the hedging vehicle would actually be meaningful to have in Uzbekistan for residents to manage their forex exposures more efficiently? Yeah, Xander, floor is yours.
Thank you, David, and good morning, everybody. Apologies for not being there. I really like Tashkent, so it's always a shame to miss the opportunity. Maybe just a quick introduction on TCX, and I'll explain a little bit on the offshore hedging market, and then move on to David's question for onshore. So TCX is a hedging vehicle which was founded by DFIs around 20 years ago, and we help to strip FX risk from international financing flows. We've been doing that for 20 years, and today we have a live book of roughly $6 billion across roughly 60 different currencies, so very diversified. And as has been alluded to several times, from an exchange rate perspective, the economy opened up in 2017 roughly, and we have been active since 2018. So we did our first ever Uzbekistan transaction denominated in SUM in 2018, and from 2020 2021 roughly, actually the Uzbek SUM has been consistently the #1 exposure for the fund on an annual basis, where we hedge around $300 million plus a year. So that totals for us now roughly $1.5 to $2 billion equivalent of flows that we have de-risked. And most of that has actually been for the private sector. So what we actually help to do is we help flows that come from international lenders to be redenominated in UZ and carrying an UZ interest rate And we mainly do that for the financial sector. So the chairman of the IPACULI Bank, who was just speaking, actually his bank has taken this product quite a lot, as well as SQB, Hamcor, Daver, Alif Bank. The list is very, very long. And interestingly, in that process, a significant portion of that risk has been sold at our instigation to offshore investors also. Why is that relevant to mention? It's because it helped pave the way for the likes of the Ministry of Finance to issue their first dual tranche euro bonds, denominated one tranche in dollar and the other in Uzbek som. And several banks and many corporates have now also followed suit to also issue their own USD-denominated instruments in the international market. So the market development in the offshore hedging markets in Uzbek som has been extremely impressive. And what's interesting, and this is a little bit anecdotal, but standardized fixings have been set up very quickly. I've never seen it that fast in other countries. It's been recognized by ISDA, EMTA as well. And market liquidity has actually overtaken some of the, let's say, traditional frontier markets in terms of liquidity. So when I say traditional, I mean the likes of the big African currencies such as Ghana and Kenya, and even recently Kazakh tenge, which traditionally was a bit more liquid, but it's going through its own period of illiquidity. But it illustrates how big the Uzbek offshore market has become. But I guess that's the key word, offshore. So we want to focus on onshore. But what TCX has been doing together, first with the Ministry of Finance back in 2021, and more recently with the Central Bank of Uzbekistan, is actually talking about two things. One is, how can we de-risk the public sector? So all of the aforementioned examples were in the private sector, but also how can we help establish a local hedging vehicle to establish a local hedging market and not just the offshore market. So to answer your question, David, yes, I believe this is a good thing to do, but as is usual in these situations, the devil is a little bit in the details. So the original request by back then the Ministry of Finance was to create a local hedging vehicle to serve the local market. And we've always said our role, we are a purely offshore player for now, is that our role should really be limited to contribute to the emergence of such a market, but have local banks be the market makers and not an offshore provider. But you can only do that if certain market conditions are adequately present. So if those conditions are not there, then of course we could help out a little bit more. So what are those conditions? Those conditions include a liberalized spot market, a freely tradable market, the ability to lend or borrow in Uzbek som through onshore money markets, or the ability to lend and borrow in dollars through offshore money markets. Why are these three building blocks so important? It's because if you use these, then you can construct a forward price that is in line with onshore fundamentals. So the creation of such a forward could be done by a local hedging vehicle, but it could actually also be done by, say, a commercial bank that has access to these three building blocks. And by doing it this way, a solution would be fully integrated with the DFI efforts to help develop local capital markets. An example would be if you borrow Uzbek at a fixed rate for long tenors, that would be subject to the creation of a transparent yield curve and a functioning money market. And Uzonia has been, I think, already mentioned the benchmark that's been set up with the help of EBRD, and that's also EBRD helping to promote that. But that's basically on the short end of the horizon. If we want to move into a more fully fledged onshore market, we would also need longer tenors to be available as well. The more decoupled forward rates become from where local cost of funds are. So if you do not have these local cost of funds, these local money markets, the more inflationary actually the impact of such hedging products would begin. So that's where I'll briefly pause and then take some feedback.
Thank you, Alexander, very much. So you bring in a very important issue that exchange rate volatility does not expose only the private sector, but also the public sector. It needs to be taken account and hedged. And you're following up on Johar's thread saying we yes, we are ready, but conditions must be predictable. Some of these conditions are technical conditions in a way. So we need to have a yield curve. We need to have functional spot markets and ability to provide longer term onshore products, which needs to be developed on the back of functional money market, which is also an important reform agenda for the central bank, as I understand. Now, continuing on managing the risks, Rashid, what about the prospects of central counterparty in Uzbekistan? What do you think? Would that be beneficial and practicable? I mean, beneficial is one thing, but practicable as a risk management vehicle?
Thank you very much for your question, Mr. Bauer. And if you let me, I would like to respond in Russian in order to be most clear for our local audience. Okay?
Yeah, давайте.
Thank you very much, and the translators will help us to set up a good dialogue. Okay? Yeah? Создание центрального контрагента. Добрый день, уважаемые господа. Я рад очень вас сегодня видеть. И я хотел бы рассказать сегодня о вызовах и, значит, о перспективах развития центрального контрагента. Почему? Потому что хороший был вопрос. Мистер Бауэр, видно, подготовился. Я, прежде чем говорить о вызовах или же каких-то перспективах развития, хотелось бы отметить, значит, предпосылки, значит, создания вот этого центрального контрагента. На данном этапе мы вот работаем над созданием этого важнейшего института, но мы все помним, когда мы ретроспективно бросаем взгляд на развитие биржевого и, в частности, валютного рынка, долгие годы, особенно валютный рынок, значит, развивался по более консервативному пути. Были торги, фиксинг и с полным, значит, депонированием денежных средств. Но представьте себе, для того, чтобы покупать или продавать определенное количество активов, участникам торгов надо было предварительно депонировать огромные суммы денег в ожидании благоприятных условий, значит, заключения сделки. Ну, и это создавало условия для роста издержек, для роста операционных расходов. Ну и, естественно, это было очень неудобно. Ну, кто-то может сказать, что это было, значит, как-то это сокращало, значит, риски, кредитные риски. В какой-то момент может так показаться, но это был очень огромным сдерживающим фактором для развития отрасли в целом, для развития биржевого рынка, потому что это был тормозом для роста ликвидности. И идти, значит, по пути развития не создавало возможности. Такие инструменты, как инструменты хеджирования, тоже были, значит, скажем так, не очень востребованы рынком. Почему? Потому что существовало требование, значит, предварительного депонирования. Таким образом, вы знаете, вот важным этапом, я считаю, главной предпосылкой создания центрального контрагента в республике стало то, что в свое время мы отменили депонирование денежных средств. Почему рынку был востребован этот важнейший институт инфраструктура? Когда мы отменили предварительное депонирование, сразу возник вакуум, сразу возник и вопрос, а кто будет управлять рисками? И в том числе на стороне контрагента. Кто будет обеспечивать исполнение сделок? А как это все будет происходить? А есть ли такой институт, где есть доверие рынка, и кем является этот институт? Таким образом, мы в январе 2022 года впервые значит, были имплементированы, значит, все системы централизованного клиринга, и в свое время валютная биржа взяла на себя функции центрального контрагента и запустила этот важнейший механизм. А вот в последующем, когда мы организовывали FX Derivatives Market, мы осознавали, что нам необходим центральный контрагент уже изначально, потому что мы понимали, что этот рынок является рынком, где должна существовать маржинальная торговля со всеми элементами маржинальной торговли, такими как initial margin, margin maintenance, margin call, и таким образом мы запустились централизованным клирингом. Вы знаете, для рынка это был хороший знак, хороший сигнал, и рынок начал, можно сказать, упражняться, значит, маржинальными требованиями. Они начали понимать, что такое центральный контрагент, вот наряду с FX-маркетом, и суть центрального контрагента был раскрыт. И вот создание последующим института маркетмейкеров, которые поддерживали двухстороннюю котировку, и появилась на всех рынках хорошая, стабильная, значит, ликвидность, дал новый импульс созданию центрального контрагента, так как центральный контрагент хорошо себя чувствует в таких условиях. То есть он должен обращаться постоянно для управления ликвидностью, ему должны быть доступны все инструменты рынка, не только хеджирования, но и репо, свапов, ну и так далее. Вот я бы вот подытожив, сказал бы так, что рынок взрослея, становясь взрослым, он сам по себе требовал создания такого вот инструмента. И вот, знаете, когда говорим о вызовах, я бы отметил бы, вот что мы имеем на сегодняшний день. Вызовы какие? Обязательно, когда центральный контрагент появляется в стране, первым делом, на мой взгляд, надо создавать крепкую систему управления рисками. Потому что центральный контрагент является концентратором вот этих рисков, кредитных рисков, и он должен защищать, он должен быть громоотводом таким, для того, чтобы рынок не должен быть подвержен системным рискам. И рынку всегда нужен такой институт. Ну и хотел бы отметить второй такой вызов, это то, что значит, этот институт должен быть технологично развитым. Потому что если нет автоматизации, если нет технологичности этого института, то очень трудно, значит, создавать такой институт, где бы не было. Регуляторная риторика, регуляторная база, крепкая регуляторная база, где четкие будут установлены правила игры, правила, значит, осуществления клиринга, централизованного клиринга, правила проведения, значит, расчетов. Это все должно быть четко понятно всем участникам инфраструктуры. Но и самое главное, в этом вопросе обязательно надо соблюдать международные требования, IOSCO, международные требования, которые подразумевают в том числе и принципы для инфраструктур финансовых рынков или Principle of Financial Market Infrastructure. И вот в этом вопросе наша компания, развивая в том числе Национальный клиринговый центр, значит, на данном этапе проходит самооценку по PFMI, которая в последующем, значит, будет превращен в внешний аудит с привлечением, значит, в этом вопросе авторитетных организаций. Но перспективы. Ну, здесь перспективы очень известны, то есть это развитие рынка, развитие, значит, роста ликвидности рынка. Но, естественно, хотелось бы отметить, что без центрального контрагента, без управления рисками невозможно построить нормально функционирующий рынок, значит, деривативов. Ну и, естественно, еще можно бы сказать, интеграция значит, на международную практику на основе вот этих стандартов. Потому что мы должны создавать в стране понятные механизмы торговли, понятные механизмы управления рисками и понятные условия игры. Тогда иностранные инвесторы будут приходить, и иностранные инвесторы будут себя чувствовать, значит, в нормальной обстановке, как и в любой другой стране. И это будет создавать предпосылки для того, чтобы развивать все рынки, в частности, и валютный рынок в том числе. Спасибо.
Thank you, Rashid, very much. So again, you repeated the need, or you're calling for predictable conditions. It's important to have predictable conditions for foreign, not only domestic investors, but foreign investors to come and to be able to trade with certainty, so that liquidity in the market grows. But you also underscored something we heard also earlier, and that is the risk management capacity of the private sector, because at the end of the day, it's the CCP that will then bear the risks if the risks are not managed properly on the level of individual institutions. So I think that is a nice summary of the end of this third part of the panel, in which we heard that the market is probably ready, but needs clear conditions, predictable, and the market will grow on the back of having good technical background, as well as on having functional money market, gradually developing yield curve, and extending tenors, so that risks can be hedged properly. So I think with that we can close this part of the panel. And for the last question, I have the privilege to welcome here Deputy Chairman Abror Mirzoev. And I have just one question for you to close our panel. We have seen changes that are not just rhetorical. The changes in the forex market and the way central bank interacts with the market, they left impact on the private sector and also on the exchange rate itself. So, from a macroeconomic perspective, what do you already see any effects? Do you see any effects on current account? Is there something that we should be looking into? Thank you.
Okay, thank you, David, for the question. And as you mentioned, so I'm a last person in this panel. So and we are discussing last 1.5 hours. It's a very interesting topic. I hope our panelists and our colleagues are not tired. So I would like to tell that after my answer, there will be a coffee break, so we can enjoy the coffee break. So as my colleagues already mentioned about the latest development and latest change in the FX market, I'm not gonna talk about the latest change, but I will try to focus more on the balance of payment and current account. So we have published for the first half of the year balance of payments data and latest change in the FX market, so the short-term volatility and the nominal appreciation in the local currency. So we haven't seen any pressure on the balance of payment. Maybe we need to analyze more. Maybe we need more data. We have to look at our forecasts and so on. So according to the first half of the year, our current account deficit significantly improved. So comparing the same period of the last year, it was 0.2% of GDP. There are several factors. The first is, of course, narrowing trade deficit during this time. And during if I tell a little bit about the data on the trades. So during the 10 months of this year, export increased by 28%. So we usually look at the non-gold exports. So non-gold export also increased by 20%. And mainly supported by agriculture products and export services. So Uzbekistan is becoming one of the tourism hub in the region. So more than 1 million tourists are coming each month to Uzbekistan. And another factor is also the favorable global commodity prices. So these inflows continue to support trade balance during this, I can say, during this short volatility period. And the second reason is the remittance. Remittance plays also a stabilizing factor for the current account deficit. And during the 10 months of this year, remittance increased by 25% and became almost 16 billion US dollars. And there are also several factors, so I'm not gonna stop there. But according to our forecast, so current account deficit is gonna be around 3.5%, with the possible deviation plus minus percentage point. And I would like to say that these trends suggest that current account deficit will remain manageable, stable, and well financed by the FDI and portfolio inflows. Thank you.
Indeed, indeed. It looks eminently manageable, and I think it's a nice touch end of our panel. So I would like to thank every single one of our panelists, and also you for having us in the Center Bank. Thank you. And as you heard from Deputy Chairman, the coffee is yours. And we will come back, not we, but someone else will come back after break. Thank you very much.
Hi, Koba, just a second. Let me close this link.
Yeah.
Leave meeting. Okay. Yeah.
Yeah.
Hello.
Yes. Do you hear me?
Yes.
Yeah.
What happened with your?
I don't know. I don't know what happened. I mean, when I would start.
Hurmatli hamkasblar, iltimos joylarga o'tirib olsanglar, ikkinchi sessiyani boshlaymiz.
Ruxsatinglar bilan bugungi tadbirimizning ikkinchi qismiga o'tsak, bu qismda prezentatsiyalar bilan davom etamiz. With your permit, we'll continue with presentations. So we'll have two presentations, one regarding to the FX market development, regulations, and infrastructure. In the first part, we more discussed about the foreign experience. And this part, I will try to present how the exchange rate of Uzbek sum has evolved in recent years, and what factors have driven these changes, and how these developments reflect the shift toward a more flexible exchange rate system under the inflation targeting framework. So as you heard and we told a lot about that, we started everything from the 2017 with the reform of the liberalization of foreign exchange market, by unifying the official rate and market exchange rate. At that time, we had several parallel exchange rates in the market, and outside of market, in the streets, in the black market, and it was some problem with the access of the entrepreneurs, individuals to the market. It was a list of companies which allowed to receive only the FX. For them, it was access for the market, and it was very important step. We granted all enterprises and households unrestricted access to the market. And second phase took place starting from 2020, 21. It was market infrastructure development, and we first replaced fixing station with call and continuous auctions, and banks became more active in price discovery, and official exchange rate was announced in a weekly basis, and then we moved to the daily basis. So it was an important part that we allowed banks in 2020 to operate in FX market for their own net open position limits, and as Rashonaka mentioned about that previously, it was some kind of requirements for make some kind of deponent some amount of money before doing the transaction. And next stage about further strengthening the market, introduction of the domestic FX market code of conduct, which was a guiding principle for the participants. And then we also introduced a new phase of development, the futures and forwards, and conceptually to be ready for the hedging and for the risk management issues. And we created some kind of methodology and guidelines, and we still should enhance this methodology and improve the guidelines in this sphere. And also we created working group, FX working group, to discuss with the market participants changes and our plans. And the cornerstone for the next stage development was starting of 2025, and we entered new stage of development. First of all, we widened it, the commercial banks and all other participants and the market widened the bid-ask spreads, and it was two-way movement. Starting from the April, the currency and exchange rate started to move in both directions. In the very beginning of the all reforms there, it was some kind of depreciation trend and some kind of corrections in some periods. Were very big corrections in some periods, but it was, how to say, very occasionally. Then starting from the April, it was two-sided, two-way movements in FX market, and the price discovery of commercial banks increased. And at the same time, we, as a central bank, we have a positioned in the ring as a price taker. And then we first asked ourselves what we can do in this market in order to not influence to the trend and to have a free floating, to move to the free floating. And we allowed, and all participants also received that we allowed more flexibility, more volatility in the market. It was a cornerstone, and then everything started to formate new expectations. First of all, for the agents, we had very long standard depreciation expectations, and it started to change. And also with the help of IFIs, started to enhance infrastructure by improving the auction style and the role of the banks in auctions. And at the same time, we increased the number of market makers. And also the big banks joined to this list. And we also allowed market makers to actively to be more active, and we widened the spreads for the market makers. At the same time, as Pinar and others mentioned about the communication, importance of communication in this market, we reestablished our FX market working group with the participation of the IFAs and experts from the different institutions and consultings, and we started to announce auction results publicly. Every day after the auction at 10:30, the Republican Currency Exchange announces the auction results, and afterwards, after the continuous session, we about 4 o'clock, we announce official exchange rate. Also, it was long period, we stopped to publish FX market review. And then we started from October to publish FX market review. It's like market dynamics. It's about how the demand and supply changing in the market, and what are the main participants' role in the market. And we'll keep publish this report monthly basis. At the same time, we'll keep to update our market participants every quarterly, and how we gonna see the changes and what we are planning to do this. And this time, every change we discussed it before it was implemented with the market participants, and we will keep on this track, and we will keep publishing. We will keep effectively communicating with the market, and our key objectives going forward will be, of course, first of all, further improvement, price discovery, and the market participants' role in the determining exchange rate, and also the widen the market infrastructure, as our colleague told about CCP, and also we have a goal to develop the local onshore vehicle, hedging vehicle, and with the help of the IFIs and consultants, we will go to this direction. Overall, our all objective is directed to the free floating FX rate, and we'll make any change, any needed actions for the fully floating exchange rate at the same time to not influence fundamental trends of the formation of the exchange rate. And our operations in the market will be only under the principle of neutrality. It was discussed that central bank not should intervene into the market. Yes, we agree, but we are at the same time sole buyer of the gold, and we should sterilize liquidity. We will participate in the market only under principle of neutrality of reserves. So if you want to see what we are doing in the market, or what our result of our operations, just looked for the foreign reserve, the value of foreign reserves. If we intervene heavily, as many of exporters and companies may say about that, the central bank heavily intervening in market and not allowing the market to act as is it, just looked for the international reserves amount. It's still increasing, not only the gold part, but liquidity part also is increasing. And we are not using the foreign reserves to sustain exchange rate or to affect the exchange rate. We only do our operations, our mirroring operations, but the price of these operations will come from the market price. So let market, first of all, set the price, then we will come with this exact amount of volume under the neutrality principle. So as I told, starting from the April 2025, the SUM started appreciate, and if you just see the last trends, it's yearly basis. It from the beginning of the year, it appreciated about 7%. As I told, it was mainly supported by strong exports, remittances, and foreign investment flows. And at the same time, the short-term price fluctuations in the market increased nearly twofold. So it's now closer to the volatility levels commonly observed in our peer emerging market countries. So if you just take the standard deviations, daily deviations, it was around 0.1% before, and then starting from the January, if you take January, November, Uzbek SUM appreciated about 0. The price movements was about 0.3. Now, if we just take the April and November, it's 0.4. We are coming closer to the mean of our main trading partners. At the same time, the emerging markets who are working under the floating exchange rate. This is a good signal for us. We are in our position, in our minds, we always keep the fact that this should be the short-term volatility. Eventually, after some period, it will bring the long-term stability. Now, this is our kind of the short-term goal in the enhancing market infrastructure and deepening the market. And one of the main important signals in the market, what have driven this kind of appreciation was, first of all, the the export growth has outpaced the import growth. It was a break-even point in 2023, and it helped alleviate structural pressures in the FX market. And also, if you see the dynamics of turnover of the market, it also has expanded significantly in the recent years, and now it stands about 83% of the GDP, and which demonstrates strong market depth and activate participation. The last number is January, October. That's why it looks like a little bit lower, but in yearly basis, it will be more. So the legal entities continue to generate the majority of FX demand, reflecting increasing engagement by the real sector, international trade, and investment. Also, the very important point, if you see that central bank, yes, participate in the market, but if you just see the last chart, you can see the centralized interventions. It's not only central bank, it's also Ministry of Finance participating in the market. The share is decreasing year by year. It was, for example, in 23, it was 34%. Now it's decreased up to 24. So yearly, and this year as well, the interventions, the operations of the Minister of Finance, operations of central bank, mirroring operations have decreased to around 23% of the total FX supply. And we are not going to increase this, and we are going to decrease it. And while market is developing, and we'll be in a smaller supply part in the market. So what was observed after that? First of all, appreciation of the SUM has contributed to lower inflation, imported inflation, goods and all, we can say food and non-food, all good inflation. Goods inflation decreased up to 5.8%. Yes, we have a little bit upper trend in service inflation, but due to the decreasing of import inflation, it helped a lot to decrease. Also, the inflation expectations, contribution from the exchange rate movement to the inflation expectations decreased 2 times. The confidence is nowadays rising to the national currency, leading to reduction of both deposit and loan dollarization, and we are observing a little bit increased trend of de-dollarization in both dimensions, in the loans and deposits as well. And a stronger SUM has also eased the external debt burden. The Etibar told about this less revenues for the government, but at the same time, we should think about the government has also the external debt that they should service for that, and the expenses for service also decrease it. At the same time, if you come to more broader way, if there is a less inflation, there is a less pressure for the government to increase wages, and because they should indexate to the inflation every year, wages and other salaries, wages and to sectors which they should pay attention. And also the private companies decreased their debt services, external debt services, roughly 5%. I told that the very important factor we nowadays observing that expectations changed in another direction. Now firms and individuals are not putting additional some premium for the exchange rate depreciation. We monthly basis run surveys with individuals and companies, and at the same time, on a quarterly basis, we do surveys and face-to-face meetings with business entities and asking them about their feelings about exchange rate dynamics, and they're answering us. They're telling us that nowadays they are not putting additional 15-20% markups to their price formation. So price formation also changed after this short two-side movement. This is a very good signal economy, and it gives us a reason that yes, we should go first of all the market side, all market also should, first of all, understand that there will not be only one direction. There will not be the only depreciation trend. It will be both sides, and we should not have fear of the volatility, as many colleagues remembered about it. And at the same time, we understand about the competition, about all kind of these issues, export revenues will decrease, and et cetera, et cetera. But at the same time, if you just analyze the export potential in exporter companies, all of them at least have some kind of loans in a foreign currency, also imports of raw materials. And if you see that they should also pay in foreign currency. And if you look deeper, appreciation or any kind of movements can affect from both sides, not only the negative side. That's why the guys in our team, they also conduct different kind of the analysis and research in order to first of all understand while everything is going to the right direction. We understand the overall equilibrium, real effective exchange rate, and how it should be. And we did analysis, and for type of economy which ours, developing economy, it's normal to have the appreciation trend, real appreciation trend in the long term. And nowadays, the behavioral equilibrium real effective exchange rate is about 2.2, 2.4% is appropriate for our economy. And at the same time, we did some kind of simulations. Despite the short-term volatility in the actual real, the average misalignment remains low, with the fundamental trends at around 0.5%. So it gives us the reason that the market should, first of all, set the price. Secondly, we should understand that exchange rate movements will have different effects to the economy, not only hurts economy, but only supports in some directions. And both movements we should allow. And at the same time, it should serve as an absorber and let the economy to feel the shocks and to be ready for that kind of shocks. And at the end of the presentation, I can tell one thing about, from the central bank perspective, what we'll do in the market, we will do for the market, sake of the market development, not against the development, not against the participants. We do for the development, for the market. Secondly, we do it under the best international practices. And we can assure you, as a market participants, our foreign partners, in future, we will coordinate and cooperate with international institutions and in both directions, not only market development and monetary policy decision-making, in research and other communication sides. And we will do our best to be in line with best foreign experience and the best inflation targeters range. We have good experience from our colleagues from the very good countries who started this kind of regime: New Zealand, United Kingdom, Bank of Canada, our colleagues, Armenia. We have very good discussions last 3 days, and our colleagues, Georgia and Czech Republic, and all other experience, foreign experience, will be very good guide us to go forward, and at the same time to build good, liquid, effective market which supports overall economic development and with at the same time macroeconomic resilience. Thank you very much. Now I will give the floor to my colleague. We had a lot of questions regarding the reserve management, regarding the reserve dynamics. As I told, if you just want to assess central bank position in the market, just look for reserves. And that's why my colleague, Mr. Abramozolimov, now take the floor and will update you about recent changes in FX and international reserve management.
Yana bir marta assalomu alaykum, hurmatli hamkasblar, hurmatli mehmonlar. Endi davramizda xorijiy mehmonlar borligini inobatga olib, men ham o'z nutqimni ingliz tilida davom ettirsam. Good morning one more time, ladies and gentlemen. now I'm going to talk about the international reserves, international reserve managements, and how we are managing our international reserves in terms of Uzbekistan and what changes we have done so far and what our plans for the future in terms of the mitigating any risks and managing international reserves. First of all, let me answer the question like what is the international reserves and why do we need the international reserves and why do we need to manage international reserves? So I have taken the one good guideline from the IMF reserve management guidelines. So there we say there are the three key features, functions of the international reserves management. The first is international reserves help support and maintain our monetary and exchange rate policies. They show that country has enough foreign currency to meet if needs. The second is reserves help to mitigate external vulnerability. So this means we are prepared for any kind of external shocks and can meet a fixed demand in difficult times. And the third, and in my opinion, one of the most important factors is reserves give confidence to markets that the country can meet its external obligations today or in the future. And in terms of the Uzbekistan's case, when we manage international reserves, we have three main principles. First of all, it should be safety. So because, international reserves, it is a country's reserve and anytime during any shock time, so it should be safe and it should help to mitigate any external risks. That's why the first priority principle is the safety. And the second is liquidity. Again, from this point of view, that in order to mitigate any external shocks, so central bank should be ready to intervene in the market. So that's why there should be enough liquid assets in the international reserves. And the third one is return or profitability. Because we manage huge amount of assets and it should bring some return. But this profitability principle should be met when safety and liquidity principles are met. So that's why we don't always look at the profitability side. Though for us, is the safety and liquidity principles are the priority. So if you look at on the right side of my slide, so you can see the international reserves trend in terms of Uzbekistan. So during the last 5 years, our international reserves has doubled from 29 billion US dollar in 2020, almost 60 billion US dollar in 2025, as of 1st November of this year. And the main factor, the sharp increase of the gold price. And you can see there that almost 81% of our international reserves are consist of gold, or in terms of US dollar, it is 48 billion. And 17% of our international reserves are consist of foreign currency. And we have also started investing some fixed income securities, and I'm going to talk a little bit later on this experience. And on the right side bottom, you can see the graph that how the gold price increase affect our international reserves. So you can see our gold volume stayed almost stable, around 12 million troy ounce. But the market value went up from 1,500 in 2020, more than 4,000 US dollar today's. And this also increased the share of the gold in our international reserves and the amount of international reserves as well. And here I'm going to talk about the international experience and what's going on with the gold in terms of the global international reserves. So you can see on the right-hand side, gold in international reserves increased from 10% up to 27% if we compare with the 2015 and the today's data. And on the other side, foreign currency decreased from 90% till 73%. So, you know, in recent years, gold has regained its importance because of the global uncertainty, economic uncertainty, and tensions between the countries and political instabilities in some regions. So when these kind of factors play, investors try to hedge their assets from against the inflation, against the market volatility. During these times, gold plays a safe haven, and investors always invest in gold. And that's why you can see from the right-hand side, I have taken this from Bloomberg site. So the global trend that for the first time since 1996, central bank holds more gold than treasury securities. This is also mainly because of the gold price increasing and the volume of the gold also increasing. And I'm going to talk about the reserve adequacy ratios because this is a much important thing that, as I mentioned earlier, our international reserves are almost 60 billion US dollar, but what does it mean for our economy? Is it good enough? Is it big enough? Or it is not enough for the mitigating any external shocks? That's why there are several types of the reserve adequacy ratios. And the first of all, import coverage ratio, which is between 11 to 16 months for Uzbekistan's case. And as of the 1st November of this year, it was 12 months. 12 months. So, you know, IMF minimum recommendation is so the international reserves should be more than 3 months. So in our case, it's well above than the minimum threshold. And the second one is short-term external debt coverage, which is also in the comfortable level. So this is also well above, or I can say the 3.5 times higher than the minimum threshold, which is the 100%. And the third indicator is also IMF indicators, so which is called assessing reserve adequacy for emerging markets framework. This is 3.2 times higher than the 100% threshold. So this assessing reserve adequacy emerging markets framework usually like calculates as a 4 components: short-term external debt, other portfolio liability, broad money, and exports. So this ratio also higher than the threshold. And the last one is reserve to GDP ratio, which is 32% in our case. So you can see it's the ratio is reducing. This is because of our real GDP is growing faster. And here I'm going to talk about the improvement in our international reserves management. Since 2020, we have been improving our management in international reserves, and we joined World Bank's RAMP program. And we also established an investment committee in the Central Bank of Uzbekistan in 2023. And we started, as I mentioned earlier, diversification of our international reserves in 2024. We started investing very small amount with the 35 million in US Treasury bills. And then step by step, we increased and as of today, we have already bought about 1 billion US dollar Treasury bills. And someone can ask a question, why Treasury bills? Why did we start with the Treasury bills? The answer is simple. The US market is the most liquid bond market, and they're deep and large market size. And of course, wide range of maturity, so which can provide us managed duration flexibility. And of course, high repo market liquidity, which can help up short-term funding. So when we say diversification of our international reserves, we usually mean converting one type of assets to another assets. So usually we convert our foreign currency to fixed income securities. So fixed income securities, when we invest in US Treasury bills, this is a liquid market, and this is a risk-free market. And someone can ask another question, like when the US Fed cutting rates, so the yield can go down, and why you are investing in US Treasury bills this time? And there is also a simple answer, because when US Treasury cuts rate, yeah, yield goes down, but the market value of the Treasury bills goes up. So when we calculate and analyze the overall, like I say, return from these, overall return from these, from the market value, and the yield is always higher than the just short-term deposits. And that's why we started investing to the US Treasury bills. Yeah, we are working on the development of the IT regime also. So here I'm going to talk about our future plans, because when we started with the US Treasury bills, it's a fixed income security, and it doesn't take a lot of, it always considers as a risk-free asset. And that's why there are another types of the assets also, for example, corporate bonds or the other international financial institutions bonds. But in order to invest such a kind of bonds, we have to finish, first of all, our integration of automatization of IT system. So we are working on this, and with the help of the World Bank RAM program, we have already developed our RFP. And when we finish this RFP, we can have a chance to invest other types of the assets as well. Yeah, that's all from my side. Thank you. If you have any questions, so I'm ready to answer. Thank you.
So, ladies and gentlemen, our colleagues online. So now it's time for Q&A, not only regarding the last two presentations, very nice and fascinating presentations by deputy chairmen of the CBU, but also regarding the previous panel that we had before the break. To any of the panelists that are here, I'm not sure if all our panelists who are online are still with us, but shoot the questions at us. I think it will be beneficial for everyone involved if we run this conversation under Chatham House rules. That means everyone can use whatever has been said and discuss for their own benefit without disclosing the name and affiliation of those who asserted the particular issues. So let us agree on that. If you disagree, please leave the room. And with that, please, floor is yours. We are happy to take questions. I didn't intend to intimidate anyone, so.
Good afternoon.
Good afternoon. Could you please state your name and
sure. Bobohon Abdullayev, JP Morgan. My question is to the central bank. And first of all, thank you very much for organizing such event. And in my opinion, it demonstrates an openness and transparency of the regulator. And my question is that in general, you covered every aspect of floating fixed rate regime, but and as you know, such kind of let's say reforms will speed up and will pave the way to the development of derivative market. And in this regard, my question is, do you have any expectations or plans regarding reforms and legislation in this area, in this specific area? Thank you.
On the question, first of all, thank you for the question, and you raised a very important thing. We working in this direction with both lines. First of all, in our in-house team, we are working on, first of all, the methodological guidance for the transactions, and we are together with our consultants. We first of all will do audit of all our guidelines and all our regulatory framework in order to give access and in order to also to give some kind of guidance to the market participants how to make the transactions in the derivatives market. Secondly, at the same time, we are working with ILMA and NAPAPA, and now they are already finished the draft of the capital market law, and now EBRD is giving some kind of recommendations on it. This is like the process is an ending stage, and at the same time, after the adoption of the law, we also will first of all do amendments to our own regulations regarding these close-out netting things and other things. And we recently we have launched the team in the central bank who works with the EBRD and other counterparts in making the recommendations for the upcoming amendments for our current regulatory documents. And at the same time, we have the another pipeline of work. We want to attract the TCX or other company to consult us in building local hedging vehicle. And we now in the beginning stage of writing the roadmap. It will be exact plan, exact timeline for the starting the work, beginning of the next year. And first of all, it will be first receiving TAs and working with organizations like professionals in this field. And then secondly, prepare our all in the documents, and the roadmap will publish around Q2 of next year. And we also consult with you, with market participants, how we can go. And it should be, first of all, yes, we understand central bank not be the part of this vehicle, but we first of all facilitate it, and we attract market participants to be the stakeholder of this vehicle. And we, from the technical side, we support of all necessary instruments, necessary things to make it possible. We had very good experience with the Minister of Finance operating this MRC mortgage refinancing company. It was facilitated by Minister of Finance, and nowadays this company playing very important role in the market. At the same time, they are the good partners of central bank in making the liquidity management operations, as well as using some kind of instruments. So we go with this direction. We help market set up the vehicle, and at the same time support from our side how we can do by attracting the consultants and attracting the professionals of that field. And we will pay the additional attention to this topic as well. Maybe my colleague also, Abramuzaki Olive, supporting.
Yeah, thank you, Nadir. If you allow me, I'm gonna just add 2 points. You know, it was like 5 years ago we implemented hedge instruments. I mean the futures in the Uzbekistan Republican Currency Exchange. But there is a like technical. There is no problem to do hedge between the counterparties, but still the market is shallow. Because, you know, during these last few years, everybody's like businesses or households, everybody's expectation was in one direction. So everybody expected only depreciation. Maybe the range was different, but everybody expected depreciation. When this short-term volatility and the increases and when the local currencies started appreciating, now I think it's time to develop the hedge market. So this comes not from the officials, like from the government authorities, but this comes from the business side as well. That's why, yeah, as my colleague Nadir told, so we're working on this direction, and I think this is a kind of will be next step of the development of the FX market.
Thank you. Other questions, please?
Assalamu alaikum. Hi, my name is Shahir Ismaghadjayev, journalist at local business media Spotus. I have one question. Since the beginning of this year, the SOM has strengthened against the US dollar more than 7%. Does such a rapid change in the exchange rate negatively affect our exporters and domestic producers? The International Monetary Fund and some local economists are urging the authorities to limit the impact of extra gold revenues on budget spending and the SOM's exchange rate, as well as to establish a reserve fund. My question is addressed to the Deputy Chairman of the Central Bank. What is your view on these proposals? Thank you very much.
Thank you for your question. First of all, we should think about the more broader picture. So how some appreciation can affect overall economy. As I told in my presentation, from the monetary policy side, we are observing different positive signs, increasing of the deposits national currency, reducing of dollarization, reducing the impact from the inflation expectations, and also the debt service is decreasing in nominal SOM terms. Yes, these indicators are showing us this. There are positive dynamics. In some sense, the strong SOM also affects to the export potential of the companies, but we should see the picture more broader. Not only the nominal appreciation can affect the overall competitiveness of the companies. They work in a global environment. For example, our trading partners have also the trading partners also witnessing some kind of appreciation of their currencies. You can see the Russian ruble, you can see the Chinese yuan. They are also appreciating starting from the year. If you just see whole basket and divide into parts, which comes from the foreign inflation side, which comes from the foreign nominal exchange rate dynamic side, for local inflation and local exchange rate. If you take just really yearly basis, starting from year has not appreciated. Just it's closed its fundamentals. If you take the basis for 2019, yes, there is a appreciation, accumulated one, but we didn't accumulate during this year, this appreciation. I can say that the competitiveness in the short term, not only, and also the long term, not only depends from the currency, it depends overall price stability in the economy. For example, imagine situation, if there is a inflation closer target, no pressure from the inflation side to the competitiveness. So in the longer period, in the long term, the competitiveness of economy, comparability, overall the advantage of the company comes from the macro stability side of things, more about the price stability kind of rather than the short-term movements in the volatility. And at the same time, if you look the more broader picture, we should think about the productivity will bring more competitiveness in the market rather than just the nominal appreciation of the sum. But we are talking about the current appreciation trend, but we don't know what will be in tomorrow, what will be after 1 month. It's also the 50-50. Maybe some can depreciate, maybe appreciate. It depends from situation. It depends from many other factors. The 7 months appreciated trend doesn't mean that after the 1 month it should also appreciate. That's why if we see the competition, first of all, we should see the more broader picture and take account not only the one nominal sum appreciation, we should also take our trading partners' positions, trading partners' national currencies positions and their inflations and their price movements. And from the another side, we should think about potential production growth. And also we should not forget about that if, for example, any exporter thinks about only short-term their revenue, they should also look for the longer term perspective. As I told in my presentation, they have always also the foreign credit lines they should serve in for them. And strong sum may help to servicing this kind of external burden of that. At the same time, they have also imports, raw materials, import of the capital goods. Any exporter has kind of some portion of the import, which eventually affects to their import price. At the same time, they will gain from that part. But I am not supporter of appreciation and depreciation. I'm supporter for free market movements. And if we see the appreciation, it also doesn't mean it will appreciate tomorrow. It will be both directions. That's why this question should be answered from the long-term perspective, and also with taking account other factors, as I mentioned about this productivity, stability, which more has in a long-term compatibility rather than just nominal fluctuations in the market. Thank you.
Thank you. Abrar, you want to add or?
Yeah, okay. I'm gonna add just 2 words that, you know, when we move to the floating exchange regime and the IT regime, so inflation targeting regime, this is from the textbook as well. So exchange rate should play as an external shock absorber. If there is a more inflow than outflow, so should appreciate. If there is a more outflow, should depreciate. So central bank doesn't intervene in the market in order to change the fundamental direction of the FX market. And another reason, so my colleague already explained everything in detail, so we have to look at the more broader picture that we are, like I also mentioned when I talked about the balance of payments, so during the 10 months of this year, export increased by 20%. This is a record high increase in the export side. I'm talking about the non-gold export. So this also means that we don't see any nominal appreciation pressure to the export side. Yeah, and again, we can discuss more details. So we have to look at the real effective exchange rate. My colleague already mentioned about this. So nominal exchange rate, this is just what's happening in our case. So real effective exchange rate, this is what's happening in our trading partners' economy as well. So that's why this is a broader question. And again, in my opinion, so exchange rate should play as an external shock absorber. Thank you.
Thank you. If I may also draw on the previous panel, especially on Pinar and Haik's contributions, they also emphasized that the central bank should simply take exchange rate as it is and should not resist fundamental movements in particular, and also that competitiveness is a very complex phenomenon to which central bank and monetary policy has very little to add. And for one thing, I think Haik mentioned that, you know, periods of appreciation also make technology imports cheaper, which is contributing to competitiveness in the economy in the long term. So it's really a complex phenomenon that is not really in the purview of a central bank. That's what previous panel was saying. We have now 2 questions. There is one Zoom question from Etibar, and there is a gentleman here in the front row. So maybe I'll now give floor to Etibar. We can see you.
Yes.
Yeah,
yes.
I can hear you.
Thank you. Yes. Before asking my question, let me make a quick comment that IMF welcomes the more exchange rate flexibility introduced this year. And we do not see, as of now, any losses in competitiveness. And more general observation is that you all very well know that there is so-called Balasta-Samuelson effect when Uzbekistan, where productivity in Uzbekistan grows faster than in its trading partner countries, and some even real effective exchange rate appreciation is expected. That shouldn't be that high, but some is expected, and it's natural it is as the economy becomes more productive, of course, the share of non-tradables, etc., in the economy grows, and you get that kind of effect. Now, my question will be a little bit on different topic. This one, not as an IMF economist, just curiosity on the composition of reserves. Some would argue that if you believe capital asset pricing model, relying too much on one asset is not a good thing because your risk-adjusted return would decline, and usually that's when any the share of any asset increases more than 30-40%, that starts to happen. So basically, I understand that you did not intentionally increase the share of gold, but you are at 81%, and these prices are volatile. It's not just it's supposed to go always up. At some point, it will go down. So you don't want to, you may not want to expose yourself too much to that and reduce over time that share. Also, one could argue that central bank actually in gold producing countries actually should have lower gold than in other countries because the country is already exposed to the price volatility, gold price volatility. If shock happens and gold prices decline, the rest of the economy will be hit. You don't want the central bank to be hit at the same time. So that's just out of curiosity. How do you see that one? Those risks? Do you plan to reduce it over time in the future?
Thank you, Eber. Abror, I guess you'll be best positioned to answer that one.
Thank you, Eber, for the question. And yeah, as I mentioned during my presentation, the share of the gold increased because of the gold price increase. The share was around 56% in 2020 in our international reserves, and it increased up to 81%. This is because of the sharp increase in the gold price. And that's why in 2024, we started diversification of our international reserves. Yeah, we also understand that when the price goes up, it can go down. So it's really difficult to predict the exact price of the gold, what's going to happen in the future. So it's not easy task. That's why we started diversification. So we started with the fixed income securities, which is safe, which is easy to manage. And we are working on this side. We will continue to work to the diversification side. We will invest to other types of the high liquid assets. And we keep our, as I mentioned earlier, these three priorities. So should be safety, liquidity, and then return. And you know, gold is safe. That's why as a conservative international reserve management, we keep the most part of our international reserve as a gold. But we don't have any target, so I cannot say that we are going to keep or we are going to reduce certain amount. But definitely we are continuing on the working of the diversification and investing other types of the high liquid assets. Thank you.
Thank you. I wonder, Carla, given your long experience in forex management of the Czech National Bank, do you have anything to add to the question and or the answer?
Well, maybe I agree with the points that have been said. I think the higher diversification is something that the central bank should target, not only from gold, but maybe from the other currencies, maybe to have a more stable return and think another thing. So I would definitely support the direction. The other trouble of gold is quite obvious. It basically doesn't generate the income, the return, unless you sell it. So the value of gold basically doubled, or I don't know what it is, but the actual income inflow to the bank was minimum from that point of from that perspective. So it's like all accounting non-realized profits that might be there. So it might be blurring the picture of the actual reserves as well. So I would be all support for wider diversification of the foreign reserves.
Thank you. I would like now to give floor the gentleman in the front row, and Simon, I see you. You will come next, please, if you are patient enough. Thank you.
Thank you very much. Shirzad Takbarov from the Asian Development Bank. My question is to Deputy Chairman Olimov. You mentioned that the first half current current account deficit was around 0.2%, and the projection for the year, if I'm not mistaken, is around 2.5%. What explains that increase by the end of the year for the full year?
Yeah, thank you for your question. So for the first half of the year, current account deficit was 0.2%, and we're expecting by the end of the year is 3.5%. The main reason is usually there is a seasonality in import side. So usually import increases during the third and fourth quarter. During the first quarter and the second quarter, there will be moderate import. This is the first reason. And the second reason is this year we export, because of the gold price increases, we export more gold during the first half of the year. That's why it helped to narrow current account deficit. And the third, I think it's there is also seasonality affecting remittance. So usually remittance inflow increase during the summertime, and from the starting of the third and fourth quarter, it decreases, and there will be less inflow from those sides as well. That's why when we forecast current account deficit, we usually forecast very conservatively. So it might be plus minus about this level. But again, if you look at the previous year data, our current account deficit was about 5%, and 3.5% is again much better position than the previous year. Thank you.
Thank you. Simon, you wanted to add or you wanted to ask a question?
David, thanks. A couple of thoughts on communications and transition. A lot's been said in this morning's discussion about the need for central bank communication, and it strikes me that a number of the questions that have come up just reinforce that. Clearly, the Central Bank of Uzbekistan has a lot of good answers to the questions, whether it's about where the balance of payments is going, what's driving the current account, where the real effective exchange rate is going. But the need to communicate that again and again and again is clear, because especially in transition, it's really important that the market understands what the context is and how the central bank sees the context. One additional thought on communication and one on transition. Nordebrecht mentioned that if the market wants to get an idea about whether or not the central bank is intervening in the market, it can look at the published foreign exchange reserves figures. And that's true to a point. But one of the problems with published foreign exchange figures, which are stock figures, is that they're net figures. So it might show the net purchases of gold. It might show the net increase or decrease in liquid foreign exchange reserves, but it doesn't tell you what the flows are in the period. And to the extent the central bank can differentiate in its communication between the regular throughput of foreign exchange, that's the part of its foreign exchange transactions that reflect the neutrality principle, and I think that's the bulk of its foreign exchanges. This is neutrality. It's nothing to do with exchange rate management. It's nothing to do with volatility. And here's a little bit, on the other hand, that might be leaning against excess volatility. If the market understands in terms of the flows which bit is which, that helps the market to understand what the central bank is doing and reinforces that the central bank is doing what it says it's doing. One thought that occurs to me in terms of the broader difficulties of transition, given that the foreign exchange reserves are currently very high and all the metrics that Nordebrecht and Avror showed that foreign exchange reserves are very strong, one might ask, if the country, the central bank plus Ministry of Finance has so much foreign exchange, why does the government borrow in foreign currency at all? why not just switch to the domestic market? It's normally cheaper to pay down foreign exchange debt using foreign exchange reserves, because almost certainly the interest rate you pay on foreign exchange debt is higher than the return you get on your foreign exchange reserves holding. But a difficulty in transition is that, let's say the government said, we'll pay off foreign exchange debt, we'll borrow more domestically, issue more 10-year bonds, and pay off any foreign exchange debt. During transition, typically the yield curve is quite steep. And looking at the CBU website this morning, the 10-year yield on government bonds in Uzbekistan is over 18%. And it doesn't make sense in the short term for the government to borrow domestically at 18% to pay down cheap foreign exchange debt, especially when the sum is appreciating. Now, that's a transitional problem, and it's a difficult one to manage, but one which, in the broader context, if it can be managed so that over time, assuming the balance of payments stays strong, the government can move its borrowing to the domestic market, help develop the domestic market in many ways, and reduce the cost of holding foreign exchange reserves funded by foreign exchange borrowing. That's a good transition, but it's difficult because in the short term it can be expensive.
Thank you, Simon. It was a very good point. Unless some of my colleagues want to comment, I would like to invite other questions. Please. Mike, please. Yeah, I think it's...
Assalomu alaykum, men o'z tilida gapiraman, uzr. Men ismim Shahnoza, Anor bank qiznechayi bo'laman. Bitta savol bor. Sentyabr oyida raqamli so'm chiqarish masalasi ko'rib chiqish ko'tarilgan edi. Shu raqamli so'm chiqarishi yaqin kelajakda qanaqa rejalar? Birinchidan, bu raqamli so'm chiqarish to'lov tizimi ancha yordam beradi, tezlashadi va shu bilan bir qatorda eksport, import va kurslarga qanchalik ta'sir qilishi mumkin? Agar iloji bo'lsa, shu yo'nalishda ozgina kommentariy bersangiz. Rahmat.
Rahmat savolingiz uchun. Avvalambor bu masala bo'yicha Markaziy bankda bir qancha oldin ishlar boshlangan, ya'ni hozirgi davr chaqiriqlariga mos ravishda birinchidan ishlarni tashkil qilish va chaqiriqlarga tayyor bo'lib borish. Raqamli iqtisodiyot, raqamli transformativ o'zgarishlar bo'layotgan payti biz 2023-yildan boshlab mana asosiy yo'nalishlarni, agar ilovalarni e'tibor beradigan bo'lsangiz, o'sha raqamli valyutalarning ahamiyati, Markaziy bankda raqamli valyutasini bog'liq iqtisodiyotga qilib qisqa bokslar berib ketganmiz, ilovalar berib ketganmiz va bugungi kunda shu masala yana ham dolzarb tus olayotganligi uchun davlatimiz rahbari tomonidan ham bu bo'lgan davlatimiz rahbari huzurida bo'lgan yig'ilishda ham bu masala taqdimot qilingan. Birinchi jarayonda, birinchi bosqichda Markaziy bank raqamli so'm chiqarish masalasini tadqiq qilib, har tomonlama o'rganib, hali juda ko'p davlatlarda bu raqamli valyuta, raqamli milliy valyuta bo'yicha tadqiqotlar boshlangan. Bizning savdo hamkorlarimizda ham, umuman davlat rivojlangan davlatlarda ham bizda mana Shveysariya Markaziy bankida yaqinda birgalikda hamkorlikda seminarlar tashkil qilganmiz. Ularda ham bu jarayon hozir juda tadqiqot bosqichida. Ya'ni Markaziy bankda o'zining raqamli valyutasi. Chunki juda ham ko'p kriptoaktivlar rivojlanayotgan paytida xuddi shu kriptoaktivlarga mos va alternativ bo'la oladigan Markaziy bank raqamli valyutasini joriy qilish masalalari hamma Markaziy bankda boshlangan. Bizda ham tadqiq ishlari va tadqiq guruhlari tashkil etilib boshlandi, tadqiq ishlari. Endi buni yo'nalishlari ko'p, balki chakana raqamli valyuta yoki ulgurji faqat banklarning o'zida muomalada bo'ladigan raqamli valyuta borasida ham hozir turli xil yo'nalishlarda biz bir qarashlarimizni shakllantiryapmiz. Bu bo'yicha keyingi yilning boshida yangiliklar bo'ladi va bu albatta sizlarning ishtirokingizda, banklarning ishtirokida bu masalalar ko'rib chiqiladi. Jarayon boshlangan, umumiy qilib aytishim, jarayon boshlangan. Birinchi etapda tadqiqotlar joriy qilish bo'yicha har xil yo'nalishlarni o'rganish, ikkinchi etapda shu Markaziy bank nuqtai nazaridan joriy qilgandagi holat avvalambor shu ulgurji raqamli valyutaga nuqtai nazardan yoki chakana nuqtai nazardan qanday ta'sirlari bo'ladi deb chuqurroq o'rgangan holda buni praktik tomonlarni o'rganib borib, keyin yakuniy xulosalar beriladi kelgusi yilda boshlarida. Abramızdaki qo'shimcha.
Thank you. So maybe last two questions.
Can I ask a question?
Yeah.
Hello, thank you very much. My name is Aziz Bek. I'm from the Monetary Policy Department. So my question is as follows to the international experts that are here on the stage. So given the increased volatility of the exchange rate over a couple of months in Uzbekistan, how do you think this affects monetary policy transmission? As was mentioned in the first part of our presentation, there should be some coordination between like policies. We heard like macro-fiscal coordination, we heard exchange rate and interest rate coordination. Do you think this can undermine monetary policy transmission or in some way result in more aggressive monetary policy to increase transmission? So what are your views on that? And I would welcome views of all of the experts here. Thank you.
Thank you. It's a tough one. Thank you. Ketevan, you think that we can go, this from this direction? I'm sorry for putting you on a spot, but.
So I hoped to be last one to answer this question.
I know.
But thank you. From the example of Georgia, I can tell you that this volatility which we have experienced there is a very small open market in the very logistically quite challenging, let's say, geography. The transmission, and I think Kopa can agree that the transmission has not been, let's say, disrupted. That's all I can say.
Carla?
Well, sharing the Czech experience or remembering the Czech experience, this is maybe emphasizing the transmission. Sometimes the transmission via the exchange rate, if I recall the history, is faster than the transmission through the interest rates. So the effects on the inflation, the positive effect on the stronger currency on the inflation, are probably to be observed faster than if the central bank would try to achieve it only by the interest rates. But I would not support in the same time, as we discussed before, to use the interest rate for that purpose. But I mean, the volatility helps the central bank in the current situation, as far as I understand it.
Heike?
Probably, I would agree with my colleagues, actually. In fact, the volatility, in fact, it helps. And I would also mention one very important thing there. Like usually we at the central banks, we are afraid of the higher volatility. It will increase, most probably might be is a factor, is kind of fear of floating intuition or interpretation that the volatility will also increase the volatility of imported prices. And here it is exactly the opposite, because when there is less volatility, there is always a temptation from the importers basically to have this one-on-one pass-through from exchange rate to the inflation or to their prices. When there is volatility and big uncertainty, basically there is no way that the importers basically every day can change the prices because they are facing the demand part. Of course, due to this uncertainty, they have to adjust or take some kind of compensation in the prices, basically some markups and there, but that's another story. And here there are different other instruments that can be helpful for them to hedging. This is from the exchange rate pass-through perspective, and also from the monetary policy perspective in general. As we know, like higher volatility. Okay, when we should understand that this volatility is not an artificial volatility. This is something that existed all the time. It was just the central bank that took all the costs basically to kind of internalize all this volatility into something else. Now, what is going on with the floating exchange rate? You basically move this volatility out there to the market, to the exact place when it should be controlled or should be taken into account, and basically all the risks and everything should be kind of managed in the place where it is proper place for the management, which is the financial market. And it will help rather than basically hinder the whole monetary policy transmission, but because now we will already go back and think of what is exactly monetary policy doing, what is communicated to the market, and what the monetary policy makers want and how want to nudge or control or whatever give to the market in terms of the transmission to all the other interest rates. So this is a kind of, I would say, this is the right direction in a sense, because now you are pushing the risk management to the right people and at the same time allowing the central bank to concentrate on the right job, which is the monetary policy and its communication.
Thank you. Pinar?
Thank you. This is a very good question. First of all, I would like to say that central banks should not complicate the processes. If it is complicated, then whatever the action they take, it can lead to undesirable results. So just simple is better. So what we experience in my own country, Turkey, so central bank has a kind of innovative policy making, but it made the investors, market participants a bit confused because they didn't know that when the central bank takes one action on the interest rate, but another action on the other, like the band and other tools, then they didn't know what will be the results. So simplification, they did it after some time, but simplification and giving the clear signals to the market is key, I think, in my view, in terms of predictability and credibility. And also interest rate channel is very important. And we have been discussing with the central bank about these issues. In the market, converging the interest rates are quite critical. So your policy rate might stand at some level, but if the banks land at different levels to the banks, individuals with a big markup, then this is an issue. So these interest rates should converge to each other, and there might be some fundamental problems, some like cyclical factors behind this gap between the interest rates, and it should be explored very well. And also, I would say that he mentioned about, my colleague mentioned about the pass-through. This is very important because there is a pass-through from consumer prices, from exchange rate to consumer prices, from consumer to producer prices. So there is a really complicated process which should be explored further in order to understand what is happening in the transmission mechanism for the effectiveness of the monetary policy. And when we see depreciation, we can easily see that prices are increasing rapidly. But you see the appreciation, but prices are not dropping at the same pace, right? Because prices are rigid downwards. And high inflation, I'm hearing from some businessmen also, I'm asking about the recent situation. They say that in the past, few years ago, inflation was much higher and they were having higher profitability, higher markups. Now they say that their markups are declining. This is not good for them, but I think this is a good sign of because high inflation can hide so many issues, problems, and can encourage the businesses to put additional markup and put pressure on inflation. I think in that terms, the CBU is in a right track. But these are the important areas that needs to be explored further to understand what are the bottlenecks, challenges in the transmission mechanisms. Thank you.
I think it was an excellent point, Pinar. Thank you. Rashid, I will pass you because you are a member of the governing institution, so not to put you on the spot. Forgive me. We have a question from Kaba online, so I would like to pass him the word now. Kaba, can you hear us?
Yes, David, thank you. It was not a question, just wanted to also add on the last question. Ketevan very rightly mentioned that increased and greater foreign exchange flexibility helped to improve transmission mechanism a lot in Georgia. And by the same token of impossible trilemma, it is necessary to have flexibility to have a very active monetary policy. And let's not forget that when we talk about greater exchange rate flexibility, we are talking about deepening of financial market, right? We are deepening of banks' activities, and banks' activities is absolutely important to make this transmission mechanism very strong. One more thing I would mention is that for transmission mechanism by itself to be stronger, it's necessary to gradually reduce the presence of state sector in the role of states in banking sector. I think this will be really necessary down the road to make sure that transmission mechanism is strong. And again, let's not forget, I heard the questions about whether it's going to hurt exports or so exchange rate. It's not just about exporters or importers. This is a shock absorber in both cases, in positive shocks, in negative shocks. It works in both ways for exports, from imports. It adjusts balance of payment and steers the economy towards the fundamentals, whether it's a deterioration or improvement. So this is really important thing. But at the same time, let's not forget that the financial sector should be ready in terms of supervision to withstand any challenges. Thank you.
Thank you for Kopa, for reinforcing that point. Simon, you would like to address that point as well, please?
Yeah, a couple of things. First, fully agree with Pinar when she noted that a simple monetary policy and monetary policy implementation communicates much better than complexity. Some years ago, someone at the TCMB, the Turkish Central Bank, said to me, "We've moved over to the dark side in operational terms." And it was true. Their operations became much more complex, and it was much harder for the market to know what is the central bank telling us. So simplicity is good. In terms of one of Aziz Bek's questions, I think a useful thing that the CBU has done, I think since July this year, is moving to a regular use of 7-day repo instead of variable periods, and making clear that the repo is at a fixed rate, at the policy rate. So that's already going a long way to strengthening the domestic monetary policy. And my take would be that the CBU should not change what it's doing because of a little bit more, I'd say, flexibility, not volatility in the exchange rate. It should carry on what it's doing to communicate clearly what its policy is, implementing it in a very clear, predictable way, and that will pay off.
Thank you. Anyone from online colleagues would like to add to this?
Yes, I just want to agree with my colleagues and Simon. In addition, I just wanted to say that this more exchange rate flexibility also helps indirectly through reducing dollarization, helping markets to pick up derivative markets, etc. But this process can also be supported by a couple of other, like taking measures to deal with other factors. Like there are a couple of issues in the economy. This is excess reserves in the economy, I mean in the financial system, by banks at the central bank, which inhibits the transmission of the monetary policy. Also, the share of the state, or in this, let's be specific, state-owned enterprises. Their responsiveness to interest rate, exchange rate is much less than like for private sector agents. Reducing the share of the state over time and also absorbing this excess reserves will help with the effectiveness of monetary policy.
Agree. Thank you. One last question, I think. One last question from the floor. Oh, Xander, go ahead. Sorry, I didn't see you raising your hand, please. We can't hear you. I think you're on mute. No, it's not coming through yet. No. If it is a question, maybe you can type it. But if it's a comment to a response to one of some of these questions, then we better wait for you to sort out the technical arrangement. If it's a question, could you thumb up? There's a comment. Okay, so we need to wait. Yeah, we'll take one question from the floor in the meantime, and I think that's a good idea. Yeah.
Assalamu alaikum. Good day. My name is Daniel Hakimov from Treasury Department of Bank Pakula. I have a small comment and small question, but many implications in it. The question is for more, I think, for international experts. We today talk more about a lot about the implications and benefits of floating exchange rate policy. But I would bring one small example from the private sector, from the banking side. What we see at the moment is a very big pressure for loan portfolio of banks on the FX side, meaning that for the business, it become more cheaper to borrow in US dollars than in local currency. And that creates additional FX exposure for banks' FX loan portfolio side. And on the other side, we see that on the liability side, individuals, population, corporates are not willing to keep their funds in US dollars as they see appreciation of local currency and trying to transfer their funds in local currency. So you can see pressure on both asset liability mismatch. So there is big demand for loans in US dollars, I mean, in foreign currency, but lack of funding in the local market in US dollars. So do you think it is normal in such transition period or moving from fixed rates to floating rates? And what other risks do you see in this matter? That's it. Thank you.
So who would like to start? Carla, would you like to start?
Can I test if it works?
Sander, yeah, you work. You're
Great,
on.
because I actually, sorry, the gentleman who just spoke, I missed his question because I was trying to reconnect or miss his name, but I heard the question, which actually perfectly ties into the comment I wanted to make before, which is there were a lot of comments around FX volatility and the fact that it's a good thing. And I certainly do agree with that. But I do want to point out one thing that we have seen from offshore and the product that we offer currently, which is the non-deliverable hedging side of things, which is, as this year has seen a steady trend of UZ appreciation, the demand for taking hedging products, as the gentleman actually I think was also just alluding to, has actually declined on average, I would say. The rates available to hedge your exposure to foreign currency, mainly to the US dollar, has actually been cheaper currently than it has been in the last 4 or 5 years. But yet the take-up is not as big as we had expected. So again, FX volatility is a good thing. But I also would say that what we have seen in practice is that the uptake of taking hedging products, hedging your risk to a foreign currency, has actually declined in the process as well, which maybe rhymes with what the gentleman was saying just now. So just it's more of a concern.
Thank you. Carla? I think mine is working, but I'm monopolizing everything here. I'm good.
Yeah, well, I will try to, okay, it's working. If I try to dig back in my memory back to 90s and the situation in the Czech Republic where there was this the fixed or pegged currency was abandoned, or National Bank was forced to abandon it by the market turmoil because the impossible trinity could not be maintained anymore. Before this arrived, there was a couple of steps the National Bank has taken before. There was like some fixing process. There was a basket of currencies. Currency was packed to the basket, and there was a very tiny fluctuation band around it, in which the National Bank could fix make the fixing. One moment we have widened this from plus minus 0.5% to plus minus 7.5%, something quite wide. And it was big shock for the banks because, frankly speaking, because they lost their easy life. They now did not knew, that there was like plus minus 7.5% fluctuation possible. And everyone was basically used to transfer all the FX exposure one-to-one to the central bank. And now the certainty disappeared. And I can imagine it was very similar in many other transitional markets all over the place, all over the world. I don't know how it is in your case, but if you went through the similar step or in Georgia. But I think this is inevitable. And this is probably one of the moments where this approach, this movement towards the flexible rate is serving as a, what can we say, educational push? Something like it forced people to learn about hedging, forced people about risk management, and finding the techniques to avoid these things, avoid these risks and handle these risks. So I don't think it's something inevitable, wrong, or bad. And I think it is inevitable in itself.
Yeah, but any movement of the exchange rate can encourage reckless behavior on the side of clients who are not educated. Situation in much of Eastern Europe is testimony of that. In the years before the global financial crisis, exchange rate appreciated massively in Eastern Europe, and that led to households borrowing in Swiss francs, and this was a massive phenomenon. So basically something that you allude to, and the banks were not consciously aware, or maybe they were aware but not taking precautions to educate the clients enough. So the clients were unhedged. They were taking these risks because it seemed very cheap to borrow in Swiss francs against the appreciating local currency. But then, when the crisis struck, it turned. So it is. I think the onus is both on the client as well as on the financial service provider to make sure that the risks are well managed and balanced.
Yeah, that's the point. The bank, the finance services provider, shouldn't be aware of this risk. Maybe even not provide a service because it can foresee better than the client where it could lead.
Yeah.
And I could add like just two words. Central Bank of Uzbekistan as a regulator is always in a position also from the lending angle to restrict if it goes to undesirable, let's say, figures. So lending angle and side of the story is something the regulator can proactively act then, like in Georgia.
Yeah, I think perfect. And I think that's a very nice end to this session. And I would like to ask Norbert, the Deputy Chairman, to provide a few closing words for today's event. Thank you. Thank you everyone participating. Also, thank you my colleagues on the panel from who are joining us online and everyone else joining online. Thank you. Norbert, the floor is yours.
Dear colleagues, ladies and gentlemen, first of all, thank you very much for all your guests for coming to Central Bank and sharing with your experience. And I took notes, and my colleagues also took notes, and Tim just did some kind of this illustration, what we have discussed today and what we took note today. And if you see the main center is just do it. And I got for myself and for the team, and also the overcome the fear and adapt the unexpected changes. All words, all the recommendations are very relevant. We agree with them, and we, in our future work, we implement. And today, especially, I enjoyed very much with this from these conversations, and at the same time, I gained that we should continue this kind of discussions in order to, first of all, understand where we are going, and secondly, to gain more and more insights from the experts and from the best ones in this field. In the Zoom, which Simon and Etibor, Koba, and all other experts contributed a lot. And from this side, we have heard a lot of good recommendations and very good experience, which will form our future work agenda, as well as we put against us any goal and a vision. We definitely will implement, and we will go through the more liquid, more good, and more best international practices in the future. Thank you very much, and we appreciate your participation. And we'll see next year with this kind of big, more broader seminars as well. Thank you very much.